Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hey everyone, got 300 people in here and we just started, so clearly got some interest going on in the producer price index this morning, which is like the follow-up. It's like the part 2 here to the CPI report that came in yesterday. Yesterday's CPI came in, it was like the lowest in multiple years, but it was higher than expected. So it was like a mixed day yesterday. It was a really weird, sort of no directional decisiveness day yesterday. It also doesn't help that the claims data also came in mixed. Yesterday, unemployment claims, let's just review this really quick. Yesterday, before we go into this day's inflation reading, inflation came in higher than anticipated, but unemployment claims came in worse than expected. So this created like this weird mixed day for a lot of markets because you got something positive, something negative in regards to the dollar's price action. So today we've got the producer price index, which is coming in about 10 minutes or so. Producer price index will have potential to move the markets. I will say this, yesterday's CPI report was not incredibly market moving like it has been in recent years. Like the CPI seems to have lost a little bit of its all importance. And if you're asking why that is, why is the CPI like cooled off in terms of its like potential threat to volatility? Well, I would say it's because the Fed themselves seems less, pressed over inflation right now. Inflation a couple of years ago, people were freaking out. Now inflation's like, it's come down a long ways, so it's not as important. What is really important, I think, to this market, most important two things to the stock market, I would say, is jobs and earnings. Let's just put E for earnings, company earnings. Where we're at with the stock market is sitting just shy of all-time highs here still. Here's your daily chart view of the S&P 500. Looks really strong overall. Bit of a slow period here recently. We've lost a little bit of momentum, just kind of going sideways. I think we're waiting to see what's next for for the data. So if you start getting cool economic data, like weakening data, it actually, I think, could act to put pressure on the S&P. But if you get continued economic positive outlook, we could rally into fourth quarter. And that's actually kind of where I lean. I lean in the direction that any dips are opportunities to stay long into year end. Because again, we can take a look at our heat map here with the Edge Finder's top setups algorithm. And what we could see here is that for the most part, economic data, in fact, let's map this out. I've got a cool tool here that you can use. If you're an Edge Finder user, head over to your data scanners page, stock indices, okay? And then look at this section right here. This is pretty cool stuff. This is one of my favorite entire utility tools of the Edge Finder is this stuff right here. So I can look pretty quick at like all the different economic data. So let's map this out. Well, jobs were good. Unemployment rate came down. That's good. Inflation came in slightly higher than expected. So that's putting a little bit of pressure on us there. Core didn't change. I'm sorry. It didn't change. It was forecasted to be 0.3, came in at 0.3. So no change there. That needs to be grayed out. I need to adjust that to do what it did here. Like if there's no change, make it gray. But retail sales been pretty good. Services PMIs were great. Manufacturing PMI is a little weak. GDP came in as expected. So this is, sort of a mixed bag here. We've got two neutrals. So if we count up what we got 1, 2, 3, 4 things that are just positive, 2 things that are looking a little more negative. Okay, so that leaves us with more of a economy's in a decent spot. Party can continue. We've got a couple minutes to go before the producer price index, which will potentially move the markets as more of a read on inflation. It's like the CPI's younger brother or sister. We'll see if it does move anything. Looking at where the markets are at, gold's up this morning. S&P is down just a little bit. Nas is down slightly as well. The Russell's down slightly. The dollar index is flat. Nikkei is up a little bit. Chinese stocks actually down again, potentially putting pressure on things like oil. I am long oil still, so let's see how this trade plays out. A trade I took a few days ago, I think 2 days ago or 3. Still in that swing trade. Silver and gold. So here's gold. Gold, I thought was going to see a little bit more of a resistance point here. Did not get any at all. I did not take a trade on it, which ended up being a decent call. But this just tells me, okay, if you've been watching my streams, then you know I've got a little bit of a bearish bias on gold right now. But listen, if price action does not agree with me, price action is bigger than me. I'm not going to take a trade if price action is not agreeing with my idea, right? So even though fundamentally I think like some of this recent data could act to push gold lower, you could also get geopolitical stuff that flares up all of a sudden and gold's right back to the highs. So price action not agreeing with me here. I was looking for some rejection off of this area. We didn't get it at all, so I don't have a trade on. I was looking at a possible sell setup here. Didn't take that trade. So price action always doesn't agree with me. It can feel like that sometimes, man, for sure. But anyways, yeah, I was looking at this gold setup as a possible sell trade. Super, super well knowing or super, what am I looking for here? Fully knowing that, you're kind of going counter trend here. If I'm trying to sell into this, thing's been on a beast mode tear this year. So what I was looking for was some pretty clear evidence that like sellers were still in control. We're not getting it, right? Let's be fair to gold here. That's a sharp push up into this area, and we didn't reject at resistance. So let's not fool ourselves here. I'm back to just kind of watching this and waiting to see what happens. If you get something where price starts to fail out today, we start seeing this pattern, okay, might come back to that bearish thesis, but I'm not going to chase a trade. I'm not gonna do that. What do you think about the Tesla massacre? Yeah, what happened with Tesla stock? Did you guys see all that stuff on Twitter and stuff? They had a big event yesterday. Kind of fell out of bed here. As a Tesla shareholder, I don't love that. However, I sold calls for 280 when markets were doing this. When the Tesla share price was kind of up and away, I sold calls at 280. Now I'm still going to be down on my shares that I own, but I'm going to be up on the calls that I sold. So it's my hedge on my Tesla position basically worked out. It's not gonna make me a ton of money, but it's gonna stop me from losing a bunch of money as well. NASDAQ down 0.25%. I'm putting myself out here as I do every day on YouTube, but I do think we probably shoot back up to test those highs. And if I'm wrong, I'm wrong. I've got a stop loss on my trade. I'm long QQQ, which is the NASDAQ ETF. I trade ETFs because as a US trader, I can't trade CFDs like NAS 100 or XAU USD. Those things are illegal to us on regulated brokerages. So I only trade on a regulated brokerage. And so I choose to use ETFs to trade. which are exchange traded funds like QQQ, all these different symbols here. I'm trading many different things. XLRE is a real estate ETF. SMH is a semiconductor ETF. If you'd like to use the broker that I use, maybe we could drop the link here in the chat. I use Webull, but if you use this specific link, you get a bunch of sign up bonus shares when you deposit. So you could trade the same broker if you're in the US. That might be for you. Anyways, we've got a couple minutes to go here, about 1.5 minutes before we get the producer price index. Let's talk about what this could do. If producer price index comes in higher than expected, that would be double whammy for the dollar, right? To the upside potentially. The first whammy was CPI yesterday. The double whammy would be if you got higher than expected producer price index. So we'll see. We got that coming out in just about a minute. I'm going to be looking at the producer price index year over year. We're consensus at 1.6. The month over month is 0.1%. Previously, we saw 0.2% month over month growth. So we'll see what that comes out to. I'm going to switch over here just really quick to our all markets view. And I'm going to come back to things like gold, and I'm going to start talking about like what this number actually means for the state of the economy, for the Fed, all that stuff in just a second. So don't leave right after the spike. We usually see that. The dips do the views do this into a print. The gamblers show up right, and then it happens, and then there's this happens. So don't be part of this, because I'm telling you, that's don't be a gambling junkie in the markets. Actually pay attention to learn something. All right, breaking news coming in. Just a few moments to go. We'll talk about what this print could do. Let's take a look. Should be coming in now. All right, producer price index, initial move here. Let's take a look. Dollar index is slightly lower. Gold is up. Silver is up. S&P, up a little bit. Nothing huge here so far. Dollar index is seeing some pressure though, taking out its last 3 hours of gains, which have been, this big pop, now dropping. Oil is up on this. S&P, let's put some figures on this. S&P is back to flat on the day. NASDAQ's slightly red. Let's see. Gold up 0.7, 0.6, 0.7, somewhere in that range. Okay, so let's go take a look at what the number is. Number came in. Producer price index year over year. Okay, they revised the previous one up. Numbers came in 1.8% compared to consensus, which was 1.6. So a higher read there. But then on the month over month, consensus was 0.1%. We got 0. So that's kind of cooler on the month over month. Let's see. Core PPI, excluding food and energy, 2.8% compared to 2.7%. They didn't revise the previous number. Okay. Oh, did they? Let me check. I think they did. Was it at 2.7 before? Sorry, revised from 2.4 up to 2.6. So interesting. It actually seems like let me just look at Forex Factory too to see what Forex Factory is a little bit easier to read, I do think. Okay, so PPI came in month over month, came in low. So I think that's where you're getting the reaction. Core PPI, okay, here we go. Month over month came in completely as expected. So this is actually looking a little bit like some good inflation data. And so there goes the market. Gosh, it's got to suck to be a bear on the NASDAQ and S&P right now. It's got to absolutely suck. And I'm not saying that teasingly, because I've had my moments this year of being bearish at the wrong time. But I'm saying that because Like you had yesterday, if you were watching, well, actually gold too. I was bearish on gold. I just didn't take any trades. But let me show you this. So if you're somebody yesterday, you're like, the big CPI number comes out and it causes, you know, this move, like that's all you got. And then you get one today, and it's basically what I'm saying is that the Nasdaq, the S&P 500, these trends are so strong right now to the upside. Same thing with gold, to be completely fair. You heard me yesterday talking about possible sell setups. I didn't take any trades. I was waiting for some rejection off this area. I did not see it, so I did not take a trade. That wasn't the only reason. I also have several positions on right now. My account is very, very full of activity. So I was like, I'm only going to take this trade if it sets up perfect. Didn't quite hit it. So a little bit of luck in there to a degree that I didn't take that short setup because it was a short setup that I usually would take. Has a speech finished? There is no speech. We're just getting data dropping. We had inflation data that was arguably good inflation data. Good inflation data is good for gold. Doesn't mean it's going to rocket through the highs. I still have my caution. I'm still, if nothing else, I'm just neutral on gold. I'm not bullish. In terms of bearishness, I was bearish, but didn't get the setup. I didn't like the price action at this level. Didn't take the trade. And so we'll see. But so gold is up about 0.7%. Silver's up, coming back into this level of support. Did not reject it. And I mean, I think this is telling you from just a strictly price action perspective, my theory on break and retest of this consolidation zone was wrong. Actually, I mean, I guess here's the thing. It came into this area, rejected it, came down, put in, if you brought this down to like a 1 hour chart, a higher low, and then it closed outside of that resistance. So, I mean, right now, bulls are looking strong. So I'm not going to mess with that. I'm not going to short it. I'm just going to wait for price action to agree with my bias. Otherwise, nothing to do. Let's take a look at the dollar index. Dollar index was up here this morning. This is a 30-minute chart. You can see kind of was pushing up higher, rejected, has come down a little bit further since then. So, in terms of my trades, I'm long oil. So did this do anything to oil? Not really. Oil's been so interesting recently. Oil is like just doing its own thing. It seemingly has been less correlated than other assets to like US economic data recently. And it would make sense. You've got war in the Middle East. You've got the Chinese economy. One day it's up, one day it's down. And that has huge implications for oil demand because the Chinese economy is ginormous. What's up, Rick? How you doing, man? I'm long gold from 2605. Look at you. Very nice. VIX is down 1.1%. Silver's up 0.7. Copper's up 0.3. So with oil, what am I going to do on this one? I'm pretty much not going to do anything with oil unless we take out these highs. So if we go boom, 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 higher high basically would trigger me to take this stop loss that I have here and start trimming it in here, etc. So I'm watching oil, but there's nothing for me to do. Let me see what I am currently floating P&L wise. $1,000 on this trade with my risk pretty dang small now. I'm risking 0.9 or so percent on the move for USO or US oil. This is an ETF. Sometimes that can be a little confusing for my audience is a little international. So for US traders, we can't trade CFDs. When you trade something like XAU USD on your brokerage, or you trade US oil or NAS 100, those things are actually illegal for US traders. We can't trade those. So you have options. You could trade futures, which is what a lot of US traders do, or you can do what I do, which is I trade ETFs. And the reason I trade ETFs is because I also trade options, and I also like all the different sector ETFs. I think that the beautiful thing about trading ETFs, the number one perk of trading ETFs, which is what I trade, is the massive list of potential things. You can niche down to exactly what you want to be long or short with ETFs. What I mean by that is right now, I have a position on US real estate or semiconductors, right? Like NVIDIA and AMD. I can buy a basket of those specific types of companies. Whereas many traders can only trade like SPX 500 or the NAS, right? In Qs. Those things are like ginormous, very, very broad baskets of stocks. With ETFs, I can get kind of more specific, but not trade an individual stock. I absolutely love it. It's over the years where I found my jam is ETFs. But again, don't get confused by that. I'm trading the exact same things. I'm trading gold just in a different symbol, right? Trading what are the reasons CFDs are banned for US traders? It's leverage, right? They're like leverage products, and I don't make the rules. If I were in charge, I'd probably say, hey, CFDs are probably fine. Let people make their own financial decisions. But the US government doesn't like the leverage attached to CFDs. The margin, the leverage, all that stuff. The US government is basically like US traders can't trade that. So they are illegal for us. Can we trade ETFs in UK? I'm not sure. You can use, actually, you probably can if you use Webull, but I can't say that for certain. If you would like to use the broker that I use, Webull actually does accept UK clients, I believe. So we'll drop the link here if you would like to trade the same brokerage as I do. I love Webull. I've used it for years. It's my favorite broker for my specific stuff that I trade. If you're somebody who's trading, if you're outside of the US and you want to trade things like gold and silver and NASDAQ, you have so many options. In fact, let's see, what are we looking at with time-wise? I'm just going to check what our live stream schedule looks like today. Remember, you guys can always check this anytime you want. If you head over to a1trading.com and click this live stream schedule button right here, you can see who's coming on the stream when. We got Kenzo coming on in 5 minutes, so that's awesome. S&P, NASDAQ, just slightly in the red here this morning. Gold gave back some of those gains. It popped up, a little bit of rejection. Thoughts on the dollar? Let's look at the dollar. Major currency pairs. USD CAD bullish, Euro USD bearish. I'm bullish on the dollar. There you go. Euro USD possible sell setups. Let's look at that. At the end of the day, what you just saw there is I have mostly systematized, I don't know if that's a word, systematically incorporated fundamental analysis into my trading. I look at the Edgefinder. The Edgefinder tracks a bunch of economic data for me. GDP numbers, PMI numbers, retail sales, CPI numbers, NFP numbers. The Edgefinder tracks it all, right? Keeps it all in check, and then generates signals based on those data points using its internal algorithm, which sounds fancy, but it's basically just reading all these reports, looking at all these numbers, and generating bullish and bearish biases for each currency pair, index, commodity. It tracks a lot of stuff. It's all automated. It's all in browser, and I can track it wherever. If this sounds like a sales pitch, it is a sales pitch. This product is freaking awesome. We've worked so hard to build what it is. Anyways, we'll come back to the sales pitch. So when I'm actually trading is I just come in here and I say, like you just asked me about currency pairs. I come into the category, I say, okay, major currency pairs, boom, top setups. Let's see, USD CAD. If you want to get so plain and simple, let's say you're just an FX trader, you trade majors like that. Let's say that's you. This is what I do. I come in here, I exclude neutral readings. I only want to see things that have strong readings. Go in here, select what you trade. There you go. This is my watch list for the day. If I was an only FX trader, I'm not only an FX trader, but if I was, there is my watch list for the day. Now, what do you do with that? Well, okay, now I go look for all the standard good technical stuff and strategic stuff that traders are looking for. So what's so cool, guys, I have the unique experience. There's only a couple of us on the dev team. There's two of us that trade and develop. Two of us, Frank and myself. We have this really cool experience where we are both active users of our product and active developers of the tool. So we're working on the tool, but we're also actively using it. When I have been on vacation in the last few years since we launched this product, this has been heaven sent for me in my approach. The Edge Finder is incredible because what I can do is while I'm on vacation or traveling, I can do what I just said. When I want to do bare minimum trading analysis, select what I trade, select biases. Here's what I'm looking for. Okay. And there's been times, I'm not even kidding. There's been times where like I went to the beach or something. I would pull up my daily watch list. I would pull up the charts, set an alert, maybe here, come back to look at it. If the Edge Finder still looks good, trade. Otherwise, nothing to do. So this is how long my analysis would take. All right, pull up the watch list. That takes about 2 minutes on the Edge Finder. Pull up the chart, mark my levels. Okay, I like this area. And what was the other one? The other one was dollar CAD. Okay, so maybe daily chart levels. If I'm trading off the daily, if I'm trading off the 4 hour, look at that. By the way, what the heck is that green candle? Come back here, mark my spot here, right? So pretty much here, right? That's where I would come back and I'd want to be interested in that area, set an alert, done. My analysis took me a total of 5 minutes, right? So, and there's been times where as an active developer and user of this tool, there's been times when I'm on vacation where that is all I will do. I will do that process. And if there's no trades, don't worry about the markets. If there is trade setups that come in, take the trade. And I'm telling you, that has been one of the coolest experiences ever because I don't have to go stare at economic data reports for analysis anymore. The Edge Finder's pulling it in automatically and showing it to me. Nick, I'm a Discord member. How do you marry Edge Finder readings with technical analysis of a chart? That's a great question. So basically what I just did, what I showed you is like, I'm looking for, this is what I personally look for. So I don't trade minor currency pairs, but I trade everything else on here. So I trade metals, major currency pairs, indices, crypto. I can take all those kinds of trades. This would be my actual watch list for possible things that I could trade. So this is what my actual watch list would be. I could trade the euro. I could trade the S&P, copper. I go through these charts, look at what I'm potentially setting up, set alerts if I'm on vacation, or if I'm actually just trading, I'm usually just, checking in on the markets a couple times a day, 2 to 3 times a day, let's call it. And if there's a trade setup, I take the trade. If there's not, I don't take a trade. And now when I go do the technicals, I'm personally trading off like the 4 hour and the daily chart. But you could trade whatever you want. The Edge Finder is not built for a specific time frame. It's just built in general for data economics, being scanned automatically for you. So, if I'm looking at SPX, right, we saw that has a bullish reading, or the Nasdaq. Let's go Nasdaq. So if I'm looking at the Nasdaq and I'm saying, okay, I've got a bullish reading, I'm just looking for key, obvious levels of support and resistance, and I'm looking for higher lows, higher highs. My technical analysis is like the most technical analysis textbook stuff you've ever seen. It's really, really simple. I'm not getting fancy with it. Simple trend lines, simple support and resistance, maybe a Fibonacci retracement here and there. but don't overcomplicate it. The part that's more important in my analysis is the fundamentals, right? What did CPI do? What is that going to do to the chart? What did NFP do? How is that going to impact the US dollar, right? Things like that. That's how we marry up the two to keep trading simple without getting analysis paralysis. The Edge Finder is meant to be a screening tool to save you some time. Speaking of that, long story short, is that a sales pitch? Yes, it is. It's a tool that I think you should get if you don't have access to, but you're serious about wanting to incorporate fundamental analysis. Not only does it scan it all for you, you can go in there if you want to understand things at a more granular level. You can pull up the GDP charts. You can pull up PMIs, labor statistics like NFP. You can pull up CPI. You can pull up all these things in the Edge Finder and study them if you'd like, or you can just keep it simple. Stay at the top setups page. Keep it real simple, and that's what a lot of users do as well. If you'd like a copy of the Edge Finder, we have been doing on-stream discounts for the last 3 days or 2 days. This is going to be the last one. If you guys would like to get access, we have been doing 25% off during CPI week. If you guys would like to get 25% off the Edge Finder, we'll drop the link here right now in the chat, and you can get access to the tool. It is worth the money. We have worked so tremendously hard over the years to build it into what it is. It's browser-based. You pay one time. It's all automated, and it is being managed actively by our team here at A1 Trading. We're a software company. Get yourself a copy, 25% off. Use that link in the chat right now to speak directly with a support rep on our team. We can get you trials. We can get you information. We can get you some nice discounts. You can pay with crypto, whatever you want to do. Speak to a member of my support staff, and they'll help you out. Okay, so now we're going to just take a quick break, guys, and then we got Kenzo for Fundamental Fridays coming in just a moment. Stay tuned. We'll be right back with Kenzo after this. You know, this Edge Finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
All right, guys, and we are back with Kenzo, Fundamental Fridays. Hope you liked that ad. We've been having fun with the spooky themed ads with Halloween just a few weeks out. Kenzo, we got some interesting data this week. We had the CPI report came in a little hotter than expected, a little bit better numbers for PPI, but markets all over the place this week. And I'm curious what you're watching. I know you were here earlier this week, and it's good to have you back again for our Fundamental Fridays session.
Yes, thank you very much, man. Yeah, I've been on the channel for a while now. So today I was looking at some events. Unfortunately, yesterday the numbers were hotter, but the thing is, jobless claims was also higher. So I think that actually made the balance, and we did not really see much of a move. So yeah, I'm actually bullish on so much of the pairs that we have. But at the moment, it seems to be a bit confusing because it seems like inflation is slowly pushing up again, and that might maybe force FOMC committee to pause with the rates. It's possible. So that will just make the market not to move that much. But we will see what will happen once time goes on.
I've seen that be a conversation going on. Is like, okay, now we're starting to see economic data is picking up. Could that hurt the story for falling inflation and hence the rate cut idea? And you've said that well. And I think that when we look at that, there's a couple ways you could potentially take that. You could take that as, well, that's going to hurt the rate cut story, and stocks are going to struggle because, many companies are going to need rate cuts. Or you can kind of take it to the example that we had for much of 2023 and 2024, Kenzo, which was basically rates kind of were staying steady, but companies that had a lot of growth still went up anyways because they weren't dependent on rate cuts. Like, I'm thinking specifically about companies like Microsoft and Nvidia and companies like CrowdStrike and all these companies that have tremendous growth irregardless of what happens with rate cuts. And the concept there is going back to quality. And that's personally where I am most convicted in the markets is, the Russell or companies that need, more rate cuts in order to really go up, I think are a more tricky place to be. I think the easier one for me personally would be things like the NASDAQ, which has these big powerhouse growth tech companies that even if rates don't move, they're still going to likely continue to deliver strong earnings, and it could lead to higher prices for those companies. So, my take on it is that I don't really want to see rate cuts come in quick. I wouldn't mind if the dollar's trending up a little bit here. It doesn't scare me too much unless I was long like the Russell or real estate stocks, which actually, to be hypocritical, I actually am long some real estate stocks. But long story short, basically, most of my positioning is long, high quality tech stuff through the NASDAQ, which has a lot of growth, even if rate cuts don't come in. Would you agree, or what do you think?
No, I actually agree. I think at the moment we are on a process of like every company, if you checked from July up now, they all performed very well. So the story of rates cuts, at least they did cut the rates with a bigger number. So even though they might not really cut around November because of mixed numbers that we get from news events, plus I don't think it's enough. I think we're still gonna have retail sales, we're gonna have PMIs, we're gonna have advanced GDPs. So there are a lot of them, and it seems like today PPI, at least it was cooler. So going further, maybe next week they might also be going down. That might still force them to cut the rates. But even if they don't really cut the rates, almost all the companies are are performing very well, which is actually good. So regardless of rate cuts, stocks will mostly go even higher. But along the way, yes, we will see those slower moves where the market will consolidate here and there because of the news events. But after we're done with those news events, everyone will be focusing on those companies' performance. And most likely they are performing very well, which means if the companies are performing very well, we end up buying. So it means it's actually a good time for us to buy slowly, even if maybe 6 months in a row, even if they don't really cut, one way or another, they are going to cut. Plus, they actually, what I've realized is, even though inflation or let's say CPI is going down, I don't think it's gonna go like 3 months in a row, like going down. So one way or another, it's gonna go a little bit up. Another month is gonna go down. So at the end of the day, it's still going down. You see.
Yeah. Yeah. No, I think, and that's the thing is you've got a lot of data coming. You've got the dollar on the rise here recently. You've got yields coming up, right? If we take a look at like the 10-year yield, which of course is part of the reason why the dollar is up, or the same reasons, right? Basically, the recent strength in economic data out of the United States is putting some pressure. But you kind of touched on it there. I mean, at the end of the day here, a lot of these companies are still delivering pretty good earnings. We do have earnings season coming up, but the theme here, in my opinion, is that, and I've been in this line of thought for some time. If we go back to, let's look at NFP and we say, look, people are still getting hired. The jobs market is still staying in there. As long as people have jobs, and by the way, we also saw some good wage growth pickup. People are getting paid, people are they have jobs, they're getting wage increases, And by the way, on a CPI basis, that's higher than CPI. So people may have a little extra money in their pockets if this continues to trend this way. So then you look at it and you say, well, that boils over into company earnings. So, for me, it's like I look at this and I say, unless we see the thing that would break the story would be bad earnings. Like if you started seeing Apple, Microsoft, Amazon, Nvidia, Google, all these companies start to deliver disappointment, that would be a red flag, I think, to the Nasdaq, to the S&P, et cetera. But definitely for now, the path of least resistance, in my opinion, is to the upside. Doesn't mean it has to go up, but I do think that's where it likely will go, considering we don't have any life-threatening news on this rally. Like right now, we just don't have that. If there's something that comes in, and it can come in at any time, to change that, then us as traders, we can look to adapt, looking for lower lows, lower highs, breaks of structure, things like that. But we just don't see that. And trying to call when that will be is very difficult on the index, which has been so strong in this bull market the last few years. So we'll see where that goes. Kenzo, I want to ask you also about gold here. I was thinking we might actually see a bit of a bigger pullback on gold, but nothing yet, right? Big reversal here off the lows, and gold seems to be kind of pushing up. I saw you had a trend line drawn on your side. Basically, it tagged support. Can I see your chart again? And what are your thoughts on gold?
Yes. On gold, as you know, I think we've been on bullish for quite some time now. So, and I'm actually still very bullish because I still believe we're still going to see some rate cuts along the way. It might not be maybe November. Even if it's November, I still believe that we're going to still have some rate cuts. But I think at the moment, when we see the disconnect between the dollar and gold, it's because there's tensions. There is geopolitics in the Middle East. So gold tends to be way too attractive. And at the end of the day, we just see gold still going higher. So I don't really see any threat on this uptrend. I still believe that we're going to still push quite higher. And I like the fact that we did see a nice reversal. This reversal was much better. So I'm still expecting to see a very nice push to the upside. I think the market actually, it's still actually even actually reacting very slower. I was expecting some very aggressive push from gold. I don't know if you can see my screen. Something just happened.
I could see your gold chart. Well, now I see your gold chart. Yeah.
Oh, okay. On my side, I think I just see a black screen, but it's fine. So yeah,
I think your camera froze, Kenzo. I'm not sure exactly where you went. Maybe your internet cut out or something. I think I can still see your screen if you're still on gold.
Yes. Also on my side, I think something went off, but it's fine. I can actually hear you. But yeah, on gold, I'm still very, very bullish. So yeah.
Okay, yeah, no. So I do think that when it comes to gold, when it comes to the path of least resistance here, we've got a pretty strong uptrend this year. It's tough to try and call this top. I mean, even this morning, we had let me see. Kenzo, if you want to just real quick, if you want to back out and come back in, that might be easier. Maybe keep your camera off if it makes it easier on your internet, but you can just come back in if that's easier.
Okay, that's cool.
Okay, Kenzo will be right back, guys. Sorry for the technical difficulties. Yeah, so Kenzo and I are talking about gold. We're talking about how, if you look at this thing on a daily, weekly chart, this has just been a year for the bulls. And it doesn't mean that it can't have a pullback. It doesn't mean it can't, retrace. But trying to time that retracement has been the toughest thing to do all year. I probably would have taken a loss had I taken this short trade that I talked about yesterday, but I didn't take it. I didn't. I have a lot of positions currently in my account, so I was just like, you know what? I'm going to wait for the right setup. It didn't show any sort of rejection, so just kind of have been paused on that idea. So we'll see what happens with price action there. I'm a bit neutral personally on gold at these prices, but price seems to want to continue up. Kenzo, are you back?
Yes, I'm actually back.
Okay, awesome. If you want to share your screen, we can continue on. I was just finishing up on that gold idea. The dollar index has also been an interesting one. We've had the dollar bit of a breakout here from this downward trend that we saw for some months. The question is,
Yes.
with dollar, how much more room to the upside does this have? I mean, we've just been on like a few weeks of just upward momentum here. Do you think the dollar is still kind of bearish, or do you think we could continue to reverse this downtrend?
Yeah, unfortunately, I want to share my screen. I think maybe that might add over
No,
a
no
load.
problem.
So, but it's fine. I will explain from your screen. So,
Mhm.
I still believe we can still have a bit of a bullish momentum here and there, because not of maybe rates cuts and stuff, but I think investors, they start to have confidence on the US economy again. It shows that we don't really have any recession, which is good. And especially when we have tensions like this, obviously US dollar becomes also a good safe haven to actually buy some bonds and stuff.
Mm.
But I don't think we will see an aggressive bullish move going further. I think maybe along the way, maybe next week, we're going to have retail sales. Maybe they will try to push the market to go a little bit lower again, because even though it's going up, I don't really want it to be way too strong up, because that won't be actually good for other stocks.
Yeah, that's very true. I mean, the dollar index kind of making a move higher is okay, but a raging move higher would be alarming, right? Because then it would really cut the probabilities of rate cuts. You know, the inflation problem may come back. Those are things that we absolutely do not want to see if we're talking about staying long. Things like the Nasdaq, the S&P, which took huge drops in 2022 from that rising inflation story. So, real good point there on the dollar index. Dollar index being up a little bit is fine. Dollar index just massive uptrend would be alarming.
Mm. Yes, no, that's true, because if you checked, I think we had like NFP was higher last. I
Mhm.
think it was last week, and now we have higher CPI. So all those actually boost the dollar, which is
Yep.
something that is good, but we don't really like way too positive news. We just need moderate news. And jobless claims, I think it was higher, but I think maybe it was linked to hurricane and stuff, because I
Mhm.
think people are not going to work and stuff in the US, obviously. So I don't think that number will just continue to go up like that. So yeah, but I think we will see what will happen next.
Yeah, no, that's a good point about the unemployment claims, because you can see a very above this trend jump. And I do think
Mm.
that you're probably right on that. I know I've heard that as well, as like um, a little bit of an uptick due to the hurricane situation. So it is possible that that number could correct back down next week and the weeks to come. These sorts of
Mm.
things, these sorts of events do happen in the world naturally, but then also, of course, they do impact our data, right? These tough things. The hurricane is tough in many ways, right? Or just
Yes.
you'll see these things happening, like things happening in the Middle East, or when Russia invaded Ukraine, the price of a bunch of like food items skyrocketed because Ukraine is like the breadbasket of Eastern Europe. So
Mm.
like these things have real world impacts. So definitely worth keeping an eye on, and also not necessarily not looking at this, but at least taking this with a grain of salt, considering that it is sort of an outlier data point. Is that
Mm.
fair to say?
Yes, yes. No, no, you're right on that, because I think since it's a weekly event, that you can see the change that is not really normal comparing to other weeks. So maybe next week or the other weeks we might see the numbers trying to cool off, and that actually it will be much better. And yeah, I think this week we might have these mixed numbers, which at the end of the day might confuse a lot. But at the end of the day, I think we still have a stronger dollar, which doesn't really need to push even higher, because at the end of the day, we still need those rate cuts.
Yep. Fair enough. Well, Kenzo, I'm going to thank you for coming on. I know we've had a little technical difficulties, but thank you for making it work anyways. And guys, if you enjoyed Kenzo's commentary, we've just dropped the link to his YouTube channel here in the chat. Do us a big favor. Go subscribe, go follow him, go find him on socials. When we do these shows, we recruit talent from all over the world. Kenzo's in South Africa. I'm in, the Southeast USA. We have people from, Norway and parts of Asia and Australia and all different places. So do us a big favor. Help to support the show by supporting our guest. Kenzo has his own YouTube channel. Make sure to go subscribe. Find him there. Kenzo, thank you very much for coming on the show today.
Thank you very much, and your viewers.
All right. Have a good weekend, man. So continuing on here, guys, if we take a look at some of the moves that are happening here this morning, let's see what we've got. We've got NASDAQ down just a little bit. S&P is down just a tiny bit. Not a huge amount of movement there. Gold seems to just be wanting to put in a higher low, but we'll see how price action reacts here to coming up into these regions again, right? You've had a bit of a pullback. But the question is this just a pullback before this, or are we going to see some sort of lower high? That's what I'm looking for. I'm pretty neutral on gold now. Yesterday I was bearish. I still, from a data points perspective, lean a little bit bearish, but price action is just not agreeing with that, right? If we put in some sort of, if we just run right back up to the highs and do one of these, then price action just disagrees with my idea, and that's okay. At the end of the day, fundamental analysis gives me direction, but price action is what I use to actually take entries and exits and trail stops and all that good stuff. Kenzo's YouTube channel was dropped here in the chat right here. Extra Hot Forex. So let's see what else we've got. So we talked about some data here this morning. I love those Fundamental Friday sessions with Kenzo just because we get to go through some data together, talk a little bit about what we've seen. This is my current watch list. I'm still sitting in some index trades to the long side. I'm looking at Bitcoin. I do also have a position on Bitcoin. I've sold puts on BITO, which even though Bitcoin has not gone anywhere, because I'm selling puts on it, the cool thing here is that, I'll show you this. Market's not open, so it hasn't adjusted, but the options market is not open. It will be open shortly. If we go over to options, so this is not updated. This will probably be up, my guess is about $350 now or $400. But I sold puts on BITO, which is a Bitcoin ETF. Long story short, I have a bullish position on Bitcoin. I'm basically putting out limit orders to buy it down here and getting paid to write those limit orders. That is the beauty of options. You can actually, the cool thing about options trading, the way I do it, I sell puts and calls. I don't usually buy them. But my point with that is you basically get paid to put out a buy limit or a sell limit. So imagine if you just, on Bitcoin, you're like, I would buy it right here. And as long as you agree to buy it there, let's say you got paid $200 just to agree to buy it if it came down here. It sounds too good to be true. There are some downsides because you have to buy it here no matter what on expiration day. So let's say if Bitcoin in the next week, let's say the contract goes out to the end of the week, and I put a buy limit right here basically by selling a put. It's a cash secured put. If this market tanks, what are the downside risks? Well, if it tanks down here, I still have to pay this price. But again, it's like putting a buy limit out there that you get paid a premium to sell that option to someone, which is why I absolutely love doing it on things that I wouldn't mind holding long term. Anyways, we're going to take just a moment's break here to thank one of our sponsors. And then we've got Forex James taking over the show here for your Friday session. We're going to be taking a look at some charts with James, hearing his thoughts on what he's looking at. I know he was looking at some commodities, looking at some currencies, all the good stuff. So stick around here for a moment, guys. Last thing I'll say before I hop off. Remember, I mentioned this earlier. This is the last call for this. We're going to do 25% off for people who are watching the stream right now to get a copy of the Edge Finder for the CPI week and PPI week. We did discounts on the stream. So if you want 25% off the Edge Finder, click the link being dropped in the chat. You could send a direct message to our support team. You can pay with crypto. You can do payment plan, whatever you want. Or it's just a one-time fee to get access to the tool. So if you'd like some information, take advantage of the live stream offer. Click there. And now, quick break, and then James is taking over the show. Check it out. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. How's everyone doing? Hope you're all having a great day. End to the week. Only a few hours left of market open, and then we can all relax after a stressful week of CPI and PPI. So, open trades. I've got 4 long-term positions. You can call them long-term swing positions or position trades. So first one, I entered into the S&P to the long side here, basically just following the momentum. This relied very little on technicals. All I saw was this breakout of the previous high and executed. Very, very simple stuff. There's not really, as far as I'm concerned, anything that warrants shorting the S&P or anything that would even drive the S&P slightly lower, really, other than natural sort of market pullbacks. I'll go over some charts, chart requests in a moment. I'll just go over what I've got open. Still got the oil position from yesterday. I think I showed this one. Opened this one after we saw, the setup that I always tell you guys about. It's just the retracement into this fib level, lines up with previous structure through here, executed on lower time frame once we saw rejections, and then I scaled in again yesterday evening once we saw more rejections on the H4. So currently sat in just under 2% profit on this trade so far. We've got New Zealand dollar. So this one is, again, very unreliant on technicals. This was just driven purely by central bank divergence. So what we've got on the technical aspect is the low here being rejected along with this 200 moving average on the daily. I've got 2 entries here. It's 1% risk split between 2 different entries, so 0.5 each. Looking for this 0.55 level to get hit sort of into 2025, maybe Q1 or even the end of this year, depending on how volatile things can get. Relatively wide stop. Obviously, this is the daily time frame, so letting this trade just run, not interfering. And we've got a very similar position here on the dollar against the Norwegian krona. So I was speaking about this trade for months, been talking about it, and then I stopped discussing it because nothing was happening, and now finally managed to find an entry point as we are seeing this smaller downtrend within the overall uptrend. And the idea for this trade was to get in before the end of 2024, and again hold this one into maybe Q2 of 2025. So you can see again really large take profit here, and currently only got 0.6% exposure, so it's split between 2 positions here. So we've got one at 0.3 and another one at 0.3. But yeah, that's it. Nothing in terms of active trades or swing trades, day trades. Very, very flat at the moment. So one of the best watches I've got, or something I'm really anticipating, is the euro dollar here. So I'd love to get short on euro dollar. And the reason is, again, we've got central bank divergence. So we've got the European Central Bank that is projected to cut rates much more aggressively than the Fed. And the Fed, I think, is going to take a much more relaxed approach. So we did have the 50 basis point cut in last month in August. Now, from the data that's come out, we had a great NFP, we had good unemployment. We also had FOMC yesterday. I think it was yesterday, or was it Wednesday? Can't remember. And that one didn't sound super dovish either. So yeah, relatively solid trade idea. It's just how do we get the entry here? Because we are relatively oversold. In my view, it's very extended to the downside. I mean, look at this run on the H4. I am expecting some sort of pullback, and then I can trade it back down to this sort of area here where we had NFP in August. NFP in August. So yeah, we'll see if we can get into that one maybe next week or the week after. Euro Swiss is one I'm looking to get into either today or on Monday. So this one is looking very good so far. Now, again, I'm relatively bearish on the euro. We've got pretty weak Eurozone data. Again, we've got the ECB looking to cut rates relatively aggressively. And we do have the Swiss that's stable, acting as a safe haven. And it's also risk aversion if we do see tensions increasing, or we see some sort of catalyst out of the Middle East. This would be a great position to be in. So I'm just waiting to see how this sort of H4 candle develops. We are currently rejecting this 50% retracement level. And again, this lines up with level of structure through here. So just looking to target sort of the previous low down at 0.92. So very, simple stuff. What's your view on the DXY, pound New Zealand, pound dollar? Okay, so the DXY isn't doing too much. It's clearly gained strength since, we had consolidation around here. We saw the pricing in of 50 basis points. We saw the unwind of carry trades. And as soon as we got the 50 basis point cut, we just consolidated on the dollar. Nothing actually happened. And since then, CPI previously came out flat, or, same as before. We had NFP come out positive. We had unemployment come out positive. We had the unpricing of 50 basis points. So more of a pricing towards 25 basis point cut. And since today's data, we've not seen much of a reaction. So overall, I'm still quite bullish on the dollar for now. Obviously, we need to take it on a data by data basis. But yeah, at the moment, the dollar looks quite healthy. So pound New Zealand, I think I was looking at pound New Zealand this morning, actually. Let's see. Where's it gone here? Yeah, it was. So if we look, technically, it looks really good to go in for a long position. We've got level of structure through here. We've broken above, come down for the retest. So a very classic break and retest sort of pattern here. Now, depending on how you draw a fib, this is a little bit discretional, and maybe I'm sort of cheating it. But, if we try and maybe force it, it does work here. And we do have the H4 moving averages that look quite bullish here. We've got the daily time frame bullish. We've got the weekly bullish. The problem is I'm just not super happy with the situation that the pound's in. Whereas the New Zealand dollar, it also isn't in a great position. So it's, you've got to look at it in a relative aspect. How does the pound look compared to the New Zealand dollar? Would I be willing to buy it? Yeah, maybe I'd buy this market. But overall, not in a huge rush. And it's not something I'm dying to get into right now. I'll have a look at pound dollar in a second. When you scale, do you use the same SL as your original entry? No. So I can show you how I scaled into oil, actually. So this is the live account on MetaTrader. You can see the positions I told you are running here. So we've got New Zealand dollar, we've got the S&P, we've got the dollar NOK, and we've got oil. So oil originally, you see I had a buy entry here that got stopped out, entered straight away after, once I saw the rejection of the pivot point and a move to the upside. So trailed the stop on the initial entry right before we had CPI. Luckily, not luckily, but it worked out quite nicely. We continued to the upside. Now we're consolidating. But for the stop loss, moved it to exactly the same place as my trailed stop. So if one position stopped out, they're both stopped out. And this just helps mitigate some risk. So, if I wanted to, if I put it into the other position, it'd be right down here, which I really don't want to do. So yeah, both stop losses in the same position, if that makes sense. Yeah, okay, so let's have a look at what was the other one? Pound dollar. Pound dollar, here we go. So it's kind of the same situation that we've got with euro dollar, but I'm just not as happy with it in terms of the central bank situation. The Eurozone is weakening much more than the UK. Don't get me wrong. Don't get me wrong. The UK is still not in a great place in terms of the economics. However, it's holding up a lot better than the euro. So if you're going to go short on pound dollar, you may as well go short on euro dollar and leave pound dollar to do what it does, because there's just more potential within euro dollar, in my opinion. We also do have this technical level here on the H4 that's acting as support at the moment. So, yeah, I wouldn't really want to sell into this. US 30, yeah, I was looking at buying US 30 actually. Problem is there's just not really anywhere to buy. It's on the Edge Finder as the top setup here, so it's not something that I'm not watching. It's just at the moment there isn't anywhere to get in. So I'd really like to see either a pullback here, retest sort of these lower highs and this 50% level, or we'd see a break, the retest, and a continuation. They're the two criteria I'm looking for to get into this market, but at the moment, neither of them are valid. So it's a case of just waiting and watching, seeing how it moves maybe next week. Australian dollar yen. Yeah, I've said this, I think it was yesterday, but yeah, the Australian dollar yen, not really worth buying. If you're trying to capitalize on the yen, so let's just have a look here. So yeah, the yen is weakening quite rapidly. So if this is what you're trying to capitalize on, there's better ways to do it. So you can buy anything rather than the Australian dollar, really. So what I mean by that is the Australian dollar had a great run. It saw stimulus in China, which obviously benefited. It saw a huge rally within the commodities markets, which again really helps the Australian economy. And both of those factors are now fading. We're seeing the commodities start to slip. We're seeing the Chinese stimulus fading. So at the moment, Australian dollar, not the best situation to be in right now, in my opinion. But yeah, I think if you were trying to do that, I'd more be looking towards dollar yen, to be honest. So what I would want to see here is a very simple break. So all we can see, really nice level of resistance. We've also got this 200 daily moving average. So if we can break above and hold above with the retest, this will be a great signal that we are changing this sort of downwards trajectory that we're on. That's two quite strong confluences broken to the upside. So yeah, dollar yen over Australian dollar yen, in my opinion. I have a question for everyone here. Is there a broker that allows stop loss for futures trading outside market hours? Survivor, I don't trade futures, but I would doubt it just from what I know about general trading stuff. You can't really modify a trade if the market isn't open. Same with stocks, CFDs. Yeah, I just don't think that's a possibility, but I might be wrong. Just sold EU, good stuff. Be careful on EU of a pullback, but I think overall it's the right idea. Hi, I'm from India. Hello, I'm from the UK. Okay, let's have a look. Dollar Swiss. Yeah, we can take a look at dollar Swiss. The problem is with dollar Swiss, it's just not doing anything really. And again, I've said this on previous streams, but it's in a situation where both currencies are doing quite well. So the dollar's been appreciating. We've got the Swiss also holding its strength, leading to this consolidation. So at the moment, there's nothing really you can do in this market. You would need to really wait for a news catalyst to swing one of the currencies either way. You can't really even wait for a geopolitical catalyst because both will benefit from the Middle East situation. So yeah, it's a little bit of a market to stay away from, in my view, at the moment. I know I spent most of this stream saying this trades aren't that great, but it's kind of a very specific market conditions. You've got to be very careful because there's a lot of things going on. You've got quite a lot of focus on the US dollar. You've also got a lot of focus on the yen. We've also got large focus on obviously risk off assets. So yeah, there's a lot of things going on. Dollar Mexican. I don't really like dollar Mexican. I got stopped out of this position the other day. I actually don't know much about the Mexican peso, to be honest. It's not really a currency that I concern myself with. But just looking at the trends, the daily's bullish. The weekly looks quite bullish. The problem is the lower timeframes don't look very interesting. So this H4 consolidating really. We are creating lower highs, but we're also creating higher lows. There's not any sort of technical setup here. So yeah, to be honest, I'd more be cautious in this one. Just can't see much going on. If you are a trend follower, then buys are clearly the way to go. But yeah, it's just, what's actually driving this market. I honestly couldn't tell you, to be honest. I say this because yesterday Nick had some stop loss in place just before CPI. Interesting. Good day, James. Euro card, USD card, with the news upcoming, with the news coming out, both took a dip. Does this mean these two markets could now be bearish, or is the dip temporary? The news. Do you mean the Canadian dollar news? Let me see. It's a good question, actually. I didn't pay attention. So we've got unemployment rate in Canada decreasing, so that's positive. We've got employment change, more people employed. We've got okay, interesting. So actually, yeah, very good news for the Canadian dollar. If I'm in the oil long positions, expecting oil to start appreciating in value again, then yeah, I would more be looking to go long on the Canadian dollar. So let's have a look. The problem is, this is a very aggressive market to try and sell. Look at the strength in this weekly candle. Look at the strength on the daily. The H4, the H1, it's not somewhere you could really start going in for sells. If you're a counter trend trader, this would probably be an amazing opportunity. But yeah, it's, for me, not quite there yet. Yeah, I would need to see more confidence within the oil market really before placing too much of a bias within the Canadian dollar. Could also maybe look for a bit of a higher entry somewhere around here on this daily level of resistance. So yeah, I wouldn't go short yet, but it's something to watch. Way too much momentum. Yeah, exactly. It's just too aggressive. If you were trying to short this market all the way up here, it would have been loss after loss after loss. There wouldn't really even been a point to get out of break even because it's just such an aggressive move. So yeah, it's not ideal at the moment. What's your take on GJ? I think GJ's got potential. Although I'm relatively bearish on the pound, I think comparing it to the yen, definitely has some upside potential. So you can see here, I'm still waiting to maybe get in. Be quite happy to see this break, retest, and continuation. But as long as we are in this range, then I'm not interested, really. It doesn't, no concern to me at all. Is it better or worse for the stock market if Harris or Trump gets elected? I'm honestly not sure. I know Trump is viewed as a more bullish indicator, but yeah, honestly, can't tell you. We'll have to wait and see. What do you think about gold? I assume you mean gold. That's a good question. I was short gold, actually. Managed to not take a loss on that one, fortunately. I managed to actually somehow make money. So I'll show you that one. Oh, I can't. MetaTrader's frozen. Anyway. You'll have to just take my word on it. So let's see. Yeah, so I shorted gold yesterday after the news around here. So I shorted, I think it was this candle here, with stop loss around here. And luckily, I managed to get out on the very bottom of this 4-hour candle. So luckily, yeah, again, didn't take a loss, but it would have wiped me out. So you may have noticed a pattern, but the way that Nick and I trade, it's very, very similar, just using very basic technical analysis and obviously economics. So you may have heard he was talking about going short here. He didn't take it. I did. But yeah, it could have been quite a strong stop. Overall, though, in the gold market, it's not convincing me either way. The problem with gold at the moment is trying to sell this market is very dangerous. It's, you know, on a tear to the upside. I would hate to be a seller in gold right now, to be honest. But we've still got tensions in the Middle East, which is still helping gold keep its safe haven strength. We have got elections coming up, and we are still in the Fed rate cutting cycle. So it's all factors for gold. But we do also have the dollar starting to pull back. The dollar's gaining its strength back after some positive data, which is then, again, a bearish indicator for gold. So we've got two pretty strong factors pushing gold both ways. So in my opinion, it's better to wait and wait for a clear signal that gold is either bullish or it's bearish. At the moment, it's too mixed. Whoever didn't take gold buys early on in the week should revisit their trading strategies in gold from 6 to 610. Their job is to catch the impulse waves and not be stuck in corrections. That's an interesting way to say it. What's about pound dollar? We've covered pound dollar, but yeah, essentially it's not very interesting, really. I think it's more leaning towards the bearish side, but it's not strong enough really to pique my interest. So if you were looking to go long in the dollar and short one of the other G10 currencies, you'd be more looking for euro dollar shorts. So we look at go back to pound dollar here. We are stuck on this relatively strong level of support, which isn't something I'm too interested in selling into right now. I'm short gold. Interesting. Well, good luck with that. Dollar CAD, we've also already covered dollar CAD. Hold on, give me a second here. Okay, cool. Sorry, I just had to read a message. Thoughts on Australian dollar yen? Again, we've already covered the Australian dollar yen, but my thoughts on this is there's better currencies to buy than the Australian dollar. So you could look at pound yen, dollar yen, even, well, actually not euro yen. Yeah, Australian yen and euro yen, kind of the weakest ones to buy, in my opinion. I think if you're already in a buy position, so you said you're in from 100, 122. Yeah, just be aggressive with the stop trailing. I'm not saying it can't work. I'm just saying it's not my favorite one. So let's see how open positions are doing. So we've got the S&P break even. Planning to hold this one to around 6,000, roughly within that level. Just looking for sort of a 1-to-1, 1-to-2. Oil making a move to the upside. Finally, it's been stuck in consolidation all day so far. It's been very boring. New Zealand dollar flat, not doing anything. And my NOK position's finally in some profit, which is nice. I don't trust the figures pushing up US 30 or pushing US 30 up. Why is that? Gold is moving bullish. But I don't understand why you say it's indecision. Because there is indecision. There's, as I said earlier, there's two things playing with gold. So earlier with gold, we had everything really in favor of gold. So if we look at the dollar chart here, we had the dollar heading to the downside. We had inflation. We had the carry trade unwind. We had NFP come out to 89K, which was a huge shock to the market. We had unemployment. We had pricing of 50 basis points. We had the cooling labor market. We had inflation staying at 2.5. We have tensions in the Middle East. We had all these problems going on that were driving gold. Now, what we've got is more of a stable dollar. So we've got positive NFP, unemployment dropping. We've got less of a 50 basis point expectation. So that's positive for the dollar, which is obviously not productive for gold going up. But we still have the safe haven attraction of gold with the Middle East tensions and elections and things. So it's, there's two things playing different ways on gold, in my opinion. I'm not saying the market's bearish, because clearly it is moving to the upside. I don't think it takes a genius to see that. But it's just not in a situation right now where I'd want to buy it. Also, the other day, banks announced lower rates. Which banks? It is the cutting season. We're seeing, let me pull up the data here. So Fed cutting, ECB cutting, BOE cutting, BOC cutting, Bank of Japan's holding, Bank of Australia's holding, Bank of New Zealand is cutting, and the Swiss National Bank is cutting. So it is the cutting cycle, the cutting season. H-ball out. To be honest, structure, in my opinion, is not that important. If that's the way you trade, again, I think we've had this discussion, but that's great. I mean, if you're bullish on gold right now, then you're more than likely making money. But for me, it's just not the way I trade. So anyway, let's have a look at the markets. Let's see what's going on. Day trades. I don't think there's anything really on the table. I'm already in the S&P. Nasdaq's down. Dow's flown to the upside. Oil, gold moving up, silver moving up, copper moving up. Looks like we are seeing a bit of relief within the commodities. Copper's been on a tear to the downside, actually. I actually don't mind copper from a technical aspect. So if we look here, we've got quite a nice level of structure. So yeah, okay. I'll do some research on copper this weekend and see if it's something I would be interested in buying. Euro dollar, pound dollar flat, pound yen moving to the upside, dollar yen. Yeah, there's just nothing really too interesting going on at the moment. Come on, guys, there isn't only one way to make money in this market. It's enough with a competitive mindset. Yeah, Cedric, I agree. Where's Nick? Nick is probably getting a cup of coffee. He'll be back later, I think. Do you think there could be a flip in the USD pairs? Depends on the data. The Fed remains data dependent. So if we start seeing data that would signal another 50 basis point cuts, then yeah, but I don't think we will. I think the dollar is stable right now, and it's not something I'd want to start betting against, really. Yeah, it looks fine, in my opinion. The data is quite supportive. The labor market isn't fixed. Don't get me wrong. I'm not saying that the US is back to being where it was. However, it's on a sort of pullback, I guess, if that's what you want to call it, or a correction. It seems to be okay. Hi, James. Is it knock trade going against the NQ long position? I'm not in NQ. Oh, do you mean the New Zealand dollar and the NOK? Yes, they are. However, I'm bearish on both. So the New Zealand dollar trade is mainly playing against the New Zealand dollar, and the USD NOK is mainly playing the NOK strength that I foresee coming into the coming months. I'm using the dollar as sort of a proxy to get into the markets. So either way, what happens with the dollar is fine. If I'm stopped out of one, it benefits the other. So it's also acts as a good hedge. An outside question: why is your camera from the side instead of the front? That is a good question. Because it's just the way my setup is. So my computers are against a wall, and it doesn't allow any room for a camera. And I also use my phone for a webcam because I don't really do streaming and things. I stream on this channel, but that's about it. So I'm not going to invest in a webcam that I don't need. So I just put my phone on a tripod next to me, and there you go. Trading with some powerful people from Germany, and the world is going around 3 years from now. Gold will explode. Yes, I agree. I think gold can quite easily reach 3,000. It's just a matter of when, really. So yeah, 3,000 is sort of my long-term target on gold. It's just a case of, yeah, you know, when is that going to happen, and how do we get in? I'm safe for people in sell positions on gold. 60% of retail traders are short. Yeah, retail is always going against what the markets are doing. It's quite interesting. Thanks for the explanation. No problem at all. The thing is with retail, a lot of the retail don't trade trends. They'll trade either very small time frames and trying to catch, you know, breaks of structure and the ICT type stuff, or they'll be counter trend trading, trying to sell resistance by support. And that can work if the economics back that idea up, but normally that's not the case. So both strategies end up losing over the long term. Q1 for 3,000 on gold. Lee, that's a bold statement, but I don't necessarily disagree. If we can see some sort of catalyst, I think if anything happens in the Middle East, that would be a huge factor for gold and oil. We could see them fly. So that's one reason I'm in oil, is just in case that happens. It's a great one to sit in and let it run. Retail go against the trend as better reward. Unfortunately, the risk is higher. We are conditioned to think cheaper equals a bargain, opposite in trading. Game chat, that's a great point. That is very good. Trading goes against all psychology that humans have naturally. So, you know, risk, trading, it's all against what we think inherently. So, you know, if you were someone investing in gold or trading gold, let's say you bought it down here as an average retail or an average investor, you would want to take profits here because you know, it can't go higher. It can't go higher. It can go higher, and it will go higher. But yeah, that is what it is. It's just the way the brain works. Can I get your analysis on pound New Zealand? Of course you can. If I can find it, I need to organize my watch list a bit more. So I was saying earlier on pound New Zealand that the pound isn't my favorite asset, and neither is the New Zealand dollar. But if we look at it in a relative view, if we compare the pound to the New Zealand dollar, rather than looking at it on like a broad scale, then I am under the assumption that the pound will outperform the New Zealand dollar. So this trade doesn't really sound like a bad idea to go long, but it's just not my favorite idea. You know, it's not something I will likely take, but it wouldn't surprise me if we do see a higher price. Can you talk about EU? Yeah, I like EU. It's my favorite chart at the moment. So it's a waiting game. This is where children become men, where you've got to just wait. So I'm sat here on the daily time frame. I'm more than likely going to have to wait a couple of days for this trade to actually come into play. But essentially what we've got is an aggressive cutting cycle by the European Central Bank. We do have cutting by the Federal Reserve, but it's not as aggressive. So it gives us a slight divergence. We also have very weak economic data out of the Eurozone compared to the US data that seems to be holding up. You know, as I said earlier, we've got the labor market that seems to be on a little bit of an uptick. So we do have quite a good opportunity to get into some short positions. It's just, again, waiting for an entry, because we've either got this previous support to act as a break and retest, or we've got this fib level here to trade sort of a 50% retracement. Either way, we're going to have to wait. There's no possible way I'll enter here because we've just rejected the 200 daily moving average. We've got this sort of level of structure here that we seem to be respecting. So right now, not the time to sell, in my opinion. Well, sorry, it's not the time to get into a swing trade to go to the sell side. But yeah, that's an overview of euro dollar. What are the odds on Australian dollar yen touching 100.2 by the end of the day? Derek, let's make a bet. Let's have a look. Australian dollar yen. Let's see. 100.2. I don't think it will. I don't know the odds. I think that would take some serious mathematical abilities that are a bit beyond me. But yeah, I think that's not possible, really, or not likely, I should say. How do you identify trend change? In two ways. So this probably isn't the best market to do it. Let's have a look at euro dollar again. So trend change can be one of two things. I mean, you can do it numerous ways. You can use trend regression tools, you can use trend lines, but I use moving averages. So you can see trends going to the upside, moving averages are fanned out, they're bullish. Now switching to the downside, this is how I determine if I want to execute buy or sells, or if I'm trading in the right direction. And then I also use simple higher lows, higher highs, but that's not always the best decision because trends can still have counter highs and lows, even if they are overall moving to the upside. But it's kind of just discretion, if I'm quite honest. Unfortunately, that's not something I can really teach you. It's just experience. You can see the market's moving to the upside, the moving averages are bullish, we're creating higher highs, it's going up. And obviously the same if it's going down. Oil analysis, Don V. For a second then I thought it said Don Vo. I was like, what's he doing here? Oil is, in my opinion, it's a little bit rocky. I'm more positioned in this as hold on, let me just find it here. Where is it? Give me a second. That's interesting. I think oil's fallen off the edge finder. It was bullish from what I remember, but yeah, it's not there anymore. But oil was bullish on the edge finder. We've respected technical levels quite nicely. So as always, fib respected this fib level. It lines up with previous structure. And oil is also in a little bit of a tricky position with the Middle East. So it's more of a hedge to see if anything does escalate there. If it doesn't, then I'll close a position for either break even or a slight profit. Did I hear the word structure? Yeah, but I use structure. Maybe I misworded it previously. Obviously, I do use structure to get into trades, but it's not a decision. It's not a determinative factor for a trade, really. It's more just if the structure's there and the economics are there, then I'll trade it. How's your idea on the pound Australian and euro Australian? Both seem good. No. To put it simply, you picked my least favorite currencies at the moment. So the pound is trash, Australian dollar and euro are all not doing very well. So as I explained earlier, we've got commodities that aren't doing as hot as they were, fading stimulus in China that's weighing on the Australian dollar. We've got weak Eurozone data. We've got the European Central Bank cutting rates quite aggressively. And for the pound, we've got weaker economic data. And we also have the Bank of England that is also now cutting rates. So yeah, fundamentally, none of those positions really sound very good to me. But if you are a technical trader, then feel free to obviously do it. Don't let me make decisions for you. James, between you and I, how do I get your Discord signals? Go to the website that's on the, you can see it under my name on the stream. It's elitetraders.io. So Euro Swiss is pulling in nicely. It's just a case of how does this develop? I don't think I'm going to enter this today because it just looks a little bit too bullish at the moment. I'd like to see how the market closes and how this actually, I'm not really a fan of the weekly or the daily. The daily time frame's showing quite strong momentum to the upside. So I'm going to hold off on this for now. I think the drivers for this market are still fine. It's just obviously I still want to pay attention to the technicals. Is there a central bank that's not cutting rates? Yes, there is. There is the Bank of Australia and the Bank of Japan. They are holding rates at the moment. Well, sorry, there's an 87% probability that the Australian Bank of Australia will hold, and there's a 92% probability that the Bank of Japan is going to hold. So they're the only two. But even so, I think just because the RBA is holding, it doesn't make the Australian dollar necessarily strong. Although it can present some central bank divergences, it's not something I'm willing to bank on, really. Euro and pound are picking up a little bit today, actually, which is good. So the yen is continuing its decline. We're starting to see, the pound, the euro, and the dollar are doing okay, which is interesting. But to be honest, the watch list is really slim. There's nothing of interest at the moment. Euro, dollar, euro, Swiss, and then I'm already in the longer term positions. Problem is oil is just not doing anything. If we look here on the H1, it's just been wicks up and down, wicks galore today. So we'll see. Actually, let me just check the time. I realized yesterday I left the stream too early, and I think it was Chandler had to take over, so I felt a bit bad. So Chris is on at 10:15 EST, so that gives me about 20 minutes roughly. So if you got any questions, let me know. If not, then I'll just keep rambling on and doing what I do. What we can do is actually have a quick look at some of the economics before. We'll skip some of the currencies. We've got the euro is pressured by market anticipation of the ECB rate cut, coupled with deteriorating economic data from major Eurozone economies, including Germany and France. The pound futures flows for the pound have turned negative, influenced by ongoing geopolitical tensions and lingering Brexit uncertainties. The Bank of England remains cautious in its approach to monetary tightening. What else is interesting here? Oil prices have surged amidst Middle East tensions and OPEC production cuts though some concerns over slowing global economic growth presents downside risk. And this is what I was talking about when I said oil's a little bit rocky. Gold, positive investor flows are largely driven by safe haven demand amidst geopolitical uncertainty and continued dovish monetary policy stances. Where do you study fundamental analysis? Do you mean where did I study, as in like formal education, or do you mean where do I get the information from? Because I didn't study it formally. I'm self-taught. I get all of my economics from Edgefinder, from bank reports, from Bloomberg, Financial Times, free resources really, apart from the Edgefinder and bank reports. Today is a complete nothing burger. It is, exactly. Today has been very lackluster. It's been a very boring Friday. Normally we see something happen on Friday, even if it's just some position closing and profit taking. But today, so slow. There's nothing going on. Australian CAD. I think Australian CAD could be a really good trade, actually, if we can see the Canadian dollar start to pick up with today's positive CAD data and the oil prices. So that would be quite nice. But at the moment, nothing I can do here. I'm not looking to buy the Australian dollar. A quiz for beginners between raw spreads. Sorry, a question for beginner between raw spreads and standard account, which is better based on your experience? They're both good for different situations. So it depends on what trading style you have. If you are a scalper, then raw spreads is better. So you get better entries. You're less likely to get ticked out at stop loss due to spreads, but you obviously have to pay the commissions. Whereas with swing trading, you don't really need super tight spreads because obviously your stops and take profits are much larger. A half a pip spread or less is not a huge deal, and you obviously don't have to pay the commissions on that trade. So yeah, it really depends on what type of trader you are. You don't need to worry really about the consumer sentiment. It's not a huge deal, I don't think, in my opinion. If you want to know what it is, I'd go to one of the news calendars and click on it and have a look. What was your biggest loss before becoming profitable? I can't remember like an individual loss, but overall, I've lost a lot of money. I've lost thousands of pounds. I remember when I started, I had some inheritance money and lost all of that trying to learn to trade. I think I had roughly about £7,000 in a trading account. And that was all I had at the time. That was like everything that I had to my name. Put it all into US30 trying to sell it. Because again, what I was saying earlier about retailers trying to sell the uptrends, that's exactly what I was doing. And lost all of it. So I'd work at 6 a.m. the next day. And I was up until about 4 a.m. watching all of my money just get eaten up by US30. My win rate is around 60%, give or take. So around 60 to 65%. But yeah, I mean, losing money in trading is kind of expected. No one expects you to start trading and make money. So either you take the super disciplined, super smart route and you just trade on demo and you treat that as a real account, or you go straight to live, or, start trading live and start losing money. Not an easy thing talking about losses. It's only not easy talking about losses if you have a persona to keep up. I don't care if people think I'm a bad trader or people don't like me. That's fine, not a problem to me. You see it quite often on social media with the course sellers and signal providers and stuff. They're like, we don't lose or stop losing by my course. It's not quite as simple as that. It's like right now, actually, I'm in loss on the new account, which is fine, but it is what it is. Demos didn't really help me. There's no emotions. I do really well on demo and then hop on live and get greedy. What is the downside? I think actually, if any of you guys watched Trader Nick's interview on Words of Wisdom, he explained it quite well. But the way I view demo accounts is that they're great if you are disciplined, because I had the same problem. I didn't take them seriously. I'd trade properly for maybe a day or two, and I'd see a good setup and risk 10% of the demo accounts. So I could never do it seriously. Whereas with live money, I did take it seriously because it was my money on the line. So it depends what type of person you are. I don't think trading is it's not a one shoe fits all or a one size fits all thing. You've got to just find what works and play your edge. So got about 15 minutes left, give or take. Let's see. US election risk, potential tariff implications have fostered a cautious approach among investors, with market positioning reflecting uncertainty. Middle Eastern tensions, the elevated geopolitical risk has resulted in premium on oil prices and increased safe haven demand on gold. China stimulus, lack of substantial stimulus from China has disappointed investors, adversely affecting Asian currencies and commodity markets. So actually what I just said about the Chinese stimulus, that is a big thing that's relating to the Australian dollar at the moment, which is why I'm not interested in buying. On demo, I was profitable for about 2 years. I really became profitable. No emotions, easy to reset account. Yeah. That's one thing, actually, that if there is any new traders in here, this is probably a bit of a strange thing to say, actually, but I wouldn't trade on a typical MetaTrader broker. It's way too easy to lose money, make a new account, feel good, trade, lose money, make a new account. And it just removes that sense of responsibility. It's too easy to just make a new account and forget about all the losses you just had. So if you use something more serious like interactive brokers, you can't just reset an account there. Your portfolio is set. If you lose 30%, it won't disappear. It will say you've lost 30% and you've got to trade your way out of it, which I think is a good learning lesson for newer people in the markets. What's the logic behind Euro Swiss? Good question. So Euro Swiss is looking pretty good on the economics front because we've got weakening euro data. We've got the ECB projected to cut rates quite aggressively. We've got the Swiss holding up because it's acting as a good safe haven among the uncertainty I mentioned. So we've got obviously tensions in the Middle East, and we also have the elections coming up. So it's attracting inflow because of that. If you are trading, have any emotion seeing numbers on a screen and you're thinking of it as it money, thinking of it as it's money, then you've already lost. You shouldn't need the money, and also it's a percentage game. Yes, ball out. I completely agree with that. The rich get richer. What I found when I made a decent income, that's true. So the first 100K is the hardest money you'll ever make, and then once you reach that 100K, it's like a snowball. So you don't even really have to do anything with 100K. You can put it all into a either a high yield savings account or just like the S&P, and just leave it, and you'll be completely fine. You'll retire a millionaire just because of compound interest. So as long as you can get to 100K, which should be everyone's goal, the first 100K, and after that, then it's smooth sailing, really. Obviously, don't be an idiot. Don't get 100K and start buying Rolexes and buying champagne at the club. That will set you straight back to square one. I'm struggling with drawing proper demand and resistance like you and Nick drew. I draw pretty large demands and supplies. Interesting. So drawing supports and resistance is not really something that you can teach very easily. Even though it's a super simple concept, I don't find it a very easy thing to teach. So for example, here is a case of just seeing we've got a low, got a previous high. They line up very well. We got a wick into here, so we draw a line. And that's now my resistance line. So it's about trying to match up the charts. It's like a jigsaw puzzle almost. You've got to see what fits. If it doesn't fit, you can't force it, because then you'll bend the jigsaw, the shapes. So, you could say, oh, well, isn't this a resist? Oh, isn't this a support? And I can't tell you why it's not, but it's just not, because I suppose you could say this low doesn't match these lows down here. There's too much of a gap. But there's not like a set rule where I can say, oh, well, it's 1% above, so it doesn't count. I don't have rules like that. It's just if they match, then I'll draw it. It's kind of a discretion game, and you kind of get it through experience. But, there's loads of videos on YouTube about that sort of stuff, so go and watch them. How long did it take you to go from losing to break even and to profitable? I think I answer this every 2 or 3 streams, but took me quite a while, really. Took about 2 years to be break even, and then it took about 6 months after that to actually start turning a profit. But the thing is, I had guidance. I didn't come into the markets and watch YouTube videos and stuff, really. Well, I did, actually, because I got into trading because of the lifestyle stuff. But once I got over that phase, I took it seriously. I went through, you know, mentorships. I networked and met people that were trading properly using fundamentals and stuff, and you know, it grows from there. Anyway, this has been a bit of a yap fest. I apologize. I know people come to the stream to see analysis and stuff, but to be honest, you know, as I said earlier, there's just nothing going on in the markets. It's very, very slow today, so there's not much I can really discuss with you. S&P finally in profit. The sad thing is I took about 0.3% risk on this, so this whole trade is kind of a waste of time, really. It's more just if we can get into the market, then I can scale in once I see a better entry point. Oil still flat, no interesting moves there. New Zealand dollar creeping higher, and my dollar NOK still kind of where it was. How do you link with these people? I'll be totally honest, it was luck. So I didn't make Elite Traders. I built a very, very small signal service. And then I caught the attention of someone. They messaged me saying, you know, do you want to do some sort of partnership? I ended up buying Elite Traders. Then I hired some people to join Elite Traders, but I had to vet them. So, for example, I've got one guy that works at Elite Traders now, very, very good. He's a family office owner, so he trades large amounts of capital for family funds. He's, you know, regulated, certified money manager, and you kind of just meet people as you go along in your journey. Do you tell people? Do you tell friends and family about your trading journey? If so, how do they react? Yeah, I don't. Yeah, I think I've answered this one as well before. But the whole thing of, oh, my family doesn't agree with trading, my friends don't like trading. They, you know, they think I'm going to lose money. Well, they're more within their rights to say that because you likely will. Yeah, I started trading. People were a bit skeptical, but no one really cared too much. But yeah, obviously you get a certain, you know, mum, dad, close friends saying, oh, it's a scam, you're going to lose money. And yeah, the stats are really, really against you. And I wouldn't be a huge supporter of my family members trading because I know how difficult it is. Whereas if it was like my child or my partner, then yeah, because I can sit next to them and help them and teach them. But, you know, if my, you know, cousin that I live nowhere near starts trading, it's like, well, you're more than likely going to lose money. Hello, I have a question. Why the euro didn't went down even though the data today were good for the dollar? Well, it depends what time frame you're on. The dollar, euro dollar did go down slightly, but it's just the impact of the news. It's how anticipated the news. We just had FOMC, we just had CPI. So PPI wasn't really in focus, I'll be honest. It's like, I think it was unemployment we had along with CPI. Let me double check. Was it? Jobless claims we had with CPI. But what was more in focus? Well, it was CPI compared to jobs claims. So although obviously jobs claims are accounted for, most investors were paying attention to the CPI result. And today, PPI, not a huge deal. Just no one, yeah, it is what it is, just the weight of the news. So let me see, 5 minutes left. Any final questions? I feel like I'm doing a Q&A today. Just seeing if I've got any notes here that you guys will be interested in. I don't think I do. I think I've already mentioned all of them. So, yeah, it's just such a boring day. Is there any trades you guys are in? If there is, I can take a look. We can have a look together. Swiss. Yeah, I'm quite confident in the Swiss, as I was showing before. I'm looking to go long on the Swiss at some point. It's just which one. I think Euro Swiss is the best option. As I said earlier, you know, I'm very bearish on the Euro. Australian dollar Swiss also might be a good one. It's just, yeah, using the Swiss's safe haven appeal really at the moment. Dollar Swiss. Yeah, so dollar Swiss, very bland. Again, it's just stuck in a range. Really, we did have a move to the upside, but since that move up, we're sort of just back into a range. It's very, very boring. And it's largely due to the fact that we've got sorry, I was reading a message. It's largely due to the fact that the Swiss and the US dollar do very well at the moment. They're both being used as risk aversion assets. So it's a case of, you know, what can we really do here? It's kind of being pressured both ways. Hey, Nick.
Hey, James, how's it going, man?
Yeah, good. How are you?
I'm good. I'm jumping in to relieve you. I saw you're run out of things to talk about, which is totally fair sometimes. So thank you for coming on, James. I'm going to do a real quick plug for everybody who's listening. If you guys are not already following James on his socials, we're going to drop a link here in the chat right now where you can go find him on social media, or you could go to his website, elitetraders.io, and check out some of the services that they offer there. James, thank you very much for coming on to show. Last thing I'll say, James, let's set up a call. This is I want to talk to you about some stuff. So
yeah,
it's going to be fun. But stay tuned. We got a lot of fun stuff coming for everybody on the stream. Next few weeks are going to be big. So James, we'll see you next time, man.
Cool. Thanks, guys. Have a great weekend. See you later.
Yeah. All right, guys, we got a couple minutes here to go. I got to jump in here and fill the gap between when Chris gets here. He's going to be coming on in just a moment to talk some charts. I wanted to talk about, I did something kind of fun. I actually sold puts on Tesla, which is kind of like buying shares of Tesla. It's not exactly, I do already own shares of Tesla, but let me show you what I did. So I have this weird situation with Tesla right now where I'm long 100 shares. Okay. I sold a call at 280. So for those of you guys who are stock traders or options traders, kind of an interesting day for me because, again, look at these two conflicting situations. This is what many traders call hedging, or it is a form of hedging, is selling covered calls, is a way to kind of softly hedge yourself. Well, check this out. I have shares of Tesla at an average share price of $229.50. They're trading at $220 right now. So those shares are underwater, meaning I'm down $800 on these, $900 on these shares. So then how am I somehow still in profit? Well, currently I'm still in profit, thankfully, due to the call that I sold. I sold a bullish bet against my existing position. This is what is called a covered call. So basically, I sold someone else the bet that Tesla would go up to $280 per share. I sold this because I did not think that we would get up to this point. And if we did, I would take profits on my position. I sold that around over here. So I was a little early, price came up, and then has tanked here this morning, making those calls that I sold, right? The call that I sold up here, somebody's bullish bet is now worthless just about. So that, as an option seller, is a really nice sort of situation. I could sit here and laugh my way to the bank, except the problem is I also own shares, so I'm not really laughing that much because I'm basically just break even. But I've sort of hedged my situation a little bit by selling that call. This is one of my bread and butter things that I like to do, is when I trade stocks, I do like to sell puts to collect some income, sell covered calls. This is not something that I talk too often about on my channel because it's a bit more complicated. We also know that when we go down the options, path, our audience is not as interested in that, and I totally get that. But at the end of the day, this is a channel where I talk about trading. This is a channel where we bring on people who talk about trading, and options is a very, very cool way to make slow and steady income if you know what you're doing. You can also hurt yourself with options, just like you can with everything. You can hurt yourself with Forex, CFDs, futures. You can misuse any tool in the market. But what I've done here today, the new position that I initiated just moments before hopping on the stream here, I sold more puts. So I sold more puts at $190 per share. So what do I get out of that? And what do you mean sell puts? I thought you only buy puts and buy calls. Well, if you sell puts, somebody else out there is making a bet that Tesla stock is going to crater down. And if they're right, I'm going to buy the shares and they're going to pocket the difference. So they're making a leveraged bet. Whoever out there in the options world market, whoever bought those puts, right? They are making a big bearish bet. I am playing the role of the casino or the house. I'll sell you that bet in order to pay that. In order to take this bet, somebody else wanted to make that leverage bet. They had to pay $500, $515 to be exact. Somebody else out in the world paid $515 for that bet. Where did that $515 go? To me, right? I'm the option seller, and I'm not. Anybody can be an option seller. You of course have to have capital, and you can also, long story short, I like to sell options. I like to sell bets to other traders. I don't like to take those bets myself. That is traditionally where the edge lies in options, is selling puts on stocks that you really like, unless the stock craters. I mean, if the stock craters, what happens? Well, I take a loss. But most of the time, the stock's going to go sideways, stock's going to go up, stock's going to scream up, might go down a little bit. But as long as by expiration date, which I mapped this out to November 15th. So what this means is that as long as Tesla stock is trading above $190 per share on November 15th, closing day, if that happens, if it's here, 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 it's here, it's here, it's here, it's here, it's here, I collect and keep my $515. In fact, actually, no matter what, I keep that $515. If the market tanks down here, I still get to keep the $515. I just have to buy the shares at the agreed upon strike price of $190 per share. So, yeah, long story short, I sold puts on Tesla this morning. Big sell off here. We, in my view, are looking a little oversold here. I didn't hate what we saw there with the robo-taxi stuff, and the company's been something I've long-term, been in and out of this stock for since 2019, I think, as when I first bought some Tesla shares. So it's a company I believe in for the long term. I think Elon Musk is a very smart dude. Controversial. I don't really care for his big controversial takes on the world, but as a businessman, I think he's a pretty smart dude. So with that said, that is what I've got for you guys. We've got our next guest taking over the stream here. It's Chris Pulver in just a second. If you guys would like to see the trades that I'm taking all the time, you can join access to our Discord server. We are doing 25% off during this live stream. You can get 25% off the signals. What do I trade? I trade options, of course, what we just talked about. I also trade things like gold and oil and silver and the S&P and the NASDAQ and currency pairs, euro, pound. I trade a little bit of everything. I'm not, a niche specific trader. I am a trader that trades a pretty broad list of items. And coming up next, our next guest is the same way. He trades a little bit of everything. Diversifying the account is something pretty cool when you employ this sort of approach. If you'd like to get access to our signals, 25% off here, send us a direct message. You can also get 25% off today, Chris Pulver's trading signals, and he's going to be joining us here just after this quick break. Stay tuned. Here comes Chris Pulver.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below, or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, happy Friday. How we doing? Well, markets ripping to the upside. We got some fresh all-time highs. Happy 45 for the S&P. Let me show the screen here. Sorry about that. It's had a lot of stuff going on this morning. I took a little strangle that ended up managing for a small loss because we just went ballistic and directional pretty much right out of the gate for the first 30, 40 minutes of trading. Took a quick win on oil for CL. P&L's up on the day by a lot. I still have a 580 call that's looking better. I'm going to see if I can close this one out. Right now it's up. I mean, unfortunately, it was a 1 DTE, so it was cheap, but it's still cheap, and I'm not making a ton of profit on it. But I'm going to take a look at the option chain really quickly. If we do get to 580 today on the SPY, I'm looking at making some profit here. I mean, somehow if we had this would be insane. But if we started today at 576 and we blow this market up to 585, that is a little capitulatory, or however you want to say it, but it could happen. So I have a SPY trade at 580. It's had a nice little P&L swing on the day, but still just barely coming back to life because it was a trade yesterday that was down and flat. Let me just look at the option chain here. So the 580 is trading around 77 cents. If we keep making our way up to 580, 581, I don't know. I don't know. It's unlikely, but who knows, man? Anything is possible with this type of move. I mean, the news doesn't appear to matter. Maybe this is it. The market just breaks the high today again, and we have yesterday's high. This would have been Wednesday's high. This would have been Thursday's trade, like right between the CPI candle. It was just choppy all day, and then Friday we're breaching the high. But if we just make a little poke above the highs and then retreat, that wouldn't surprise me. But if we make a breach of the high and we just stay bullish all day, who knows? So I'm going to keep an eye on that, but it's not quite enough. I guess it is. I can go to break even or better on that trade. So I've got it in. Let me see what that's trading for. I've got a trade in for $1.16 credit. I'm just going to move the stop loss order, which means I'm likely going to get stopped out. But I'm going to put this thing at 60 cents and put this in as a stop market order and just essentially take it at break even. So I paid 58 cents for the debit. I'm putting in a stop loss at 60. And if it wants to go higher and higher, I hope that it does, then I'll just let this thing run for the day. So stop market here at, let's go 60 cents. And we're trading right now 86. So I'm going to try to let those profits continue to run on the upside. So that stop loss is in. And if this keeps drifting up higher, I'll just keep an eye on my other screen, which looks like this. And if this thing just goes green, green, green through 580, then I'll take a look and maybe close it out for $1 plus and try to get like 100% return on capital. If I just keep the stop loss at break even or better, then hopefully this just keeps running up into higher levels and I can manage it for even more profit. So that's best case scenario. I did take a couple losses this morning on the SPX. So a trade that I like to take is at opening bell, I will sell calls above and puts below and usually grab some quick profit. That was yesterday. That was the day before. And usually you had those be really nice wins in the morning. And then today it just was a lot more directional when we had this bump here at 10:05. Just started to push me out into my stop loss area. So I'm not going to let the trade get too big on the stop loss side. So I ended up managing a small loss this morning. But that is about it. Other than that, like portfolio is doing okay. One thing that's a little income play for me is Walgreens is an income play for me. I bought some shares at $8.80. I then sold an in the money call at $8 for $1.15. So I actually got about 35 cents of extra premium there. So it brings my cost basis down to $7.65. I need price to stay by next Friday. If price stays above $8, you get called away for 35 cents a share. That'll be $350. I also did a similar trade on JD, and I bought the shares at $43.90. I sold a 44 covered call for 60 cents credit, puts me at a break even around $43.30. I'm going to check that position right now because if my call side at 44 with a 0 DTE is already down to like, let's say 10 cents or 5 cents debit, I might just close it and then put a new trade on for next week and collect that extra credit over the weekend. So I'm going to take a look at JD right now. We did have some earnings overnight. It was mostly in the financial space. BlackRock hit all-time highs. JPM was pretty quiet today. I'm just going to spot check those plays. So BLK for BlackRock had a nice gap to the upside. So we had a 954 gapped up to 960 and just ripped here. BlackRock, of course, which owns like a third of the world's assets, pretty much, is just ripping here to all-time highs. I'm sure they're loving it, and they might be getting a lot of extra celebration because of their hat in the ring with crypto. Bitcoin actually tapped below 60,000 overnight, but is coming back a little bit. So Bitcoin is now, where are we at? Bitcoin's at 61.8. I was looking at a trade on MicroStrategy. We're coming up near all-time highs on MicroStrategy. Have these other ETFs turned yet? So BITO turning up today a little bit, IBIT turning a little bit, FBTC turning a little bit, Bitcoin after a little bit of a dip here at 50, almost just below 59,000, turning up. MicroStrategy, I've got a chart alarm set at all-time highs. I mean, that's impressive. It's like Bitcoin's not at all-time highs and MicroStrategy is. Not sure how that plays out, but it is what it is. Gold is up today as well. Silver is up as well. The inflation readings that we saw today, I mean, the SPY's just up higher. We're at 579.81. So my little SPY trade here is trading up over $1. So I've got 58 cents into the trade. It's up to $1.09. I mean, this thing might as well just freaking rip. Might as well rip. $1.10, $1.12. I mean, just go, would you? $1.15. All right, I'm going to move this stop loss now to $1.10. What? Rejected? You guys are idiots. Close. Oh, let's go. I'll go $1.05 and just probably get this thing stopped out. Filled at $1.05. Okay, so that was a quick win. Trade update here. SPY, 10-11 expiration, 580 long call, 58 cents debit, closed for 1.05 credit. Okay, and that should be in our Discord as well. A1 trading should be an index trade under my section. Let's see here. Yep. So I canceled the 569, 568, 567. I left the 580 on. I'm going to do a quick update on that trade right here. So edit message and update. Closing for profit. Is this thing going higher again? You son of a gun. Yeah, a little bit. I mean, it's for a 0 DT, it's like this thing has to squeeze like crazy. But we're sitting right there at 580 today. If it gets to 585, as Chandler says, skin me alive and call me luggage. Little inside joke there. All right, updating that SPY trade for 580. $141 debit. Closing at $1. And then a 58 cent debit. Closing at. All right, let's get that one updated. Updated. Okay, so that's updated in Telegram. Just going to keep an eye on that price. Okay, I want to take a look. So silver's up today. Gold is up today. The portfolio is doing pretty well, up about 14 grand, despite the little paper cuts on SPX this morning, which was frustrating. But it is what it is. You know, it just was a directional day. This market is just flying high, I guess. So here's the SPY at all-time highs. The Qs not quite breaking out to recent highs. The Dow also breaching all-time highs. The Russell, pretty bullish on the day. I mean, advanced decline line's got to be up there. Let's go to FinViz today. Advanced decline line's got to be up there. Look at this, 70% of stocks advancing today. We're lighting up green here in the financial space. This is a good way to kick off earnings. I'm not going to lie, just based on this heat map right now. When you got JPM up, Wells Fargo up, Bank of America, Citigroup, all these stocks showing green like this as we kick off earnings season, it's probably a good thing. Capital market, there's Morgan Stanley, there's Goldman Sachs, there's Schwab, PNC, USB. So off to a pretty good start for earnings. If that is any sign of the consensus that we're about to face with earnings over the next 2, 3, 4 weeks, this, I don't know, this truly could be like the market is just, who cares about inflation right now? We're going to run hot. The best place to be for taming inflation and offsetting inflation is to be in the stock market, right? So assets go higher. I mean, if you saw the news this morning, here's your 10 a.m. news. We had the 8:30 PPI data that came out, also slightly higher than expected. The PPI year over year was 1.6 forecast, came in 1.8, revised higher from 1.7 to 1.9. So higher producer price index. PPI core, forecast at 2.7 came in 2.8, revised higher from 2.4 to 2.6. Prices go up. Okay. Our stock market goes up. Inflation expectations for the University of Michigan go up. They're talking about 1-year inflation expectations at 2.9, 5-year inflation expectations at 3%. So doesn't scare the market right now, obviously. So Dow's at all-time highs, SPY's at all-time highs. It is what it is. I mean, I just had a directional day, and unfortunately that didn't bode well for my little strangle, but it's okay. I'm just not going to let this thing get out of hand. I mean, if I want to sit here and let it go all day, it's like I'm risking, I don't know, $15,000 or $1,500 to make $50 to $100. It's just not worth it. So I cut off the trade with a $300, $400, $500 loss just to be on the safe side. But like I say, it's paper cuts considering the overall portfolio is doing fine. I'm looking at some income plays on WBA. I didn't get a chance to do any financials on the earnings side, but Domino's Pizza was a good one this week for $500. And next week we have more earnings. Netflix is on Thursday, so we'll definitely price out Netflix next week. And that's pretty much where I'm at for right now. I did a little strangle in oil. Let's do some just spot checking here. Anything on the currency strength currency strength side today? Currency strength. Japanese yen getting weaker. Swiss second. CAD had a bounce with I think they had solid news this morning, didn't they? Yep. So unemployment went down to 6.5. Their unemployment jumped up about 20,000. And then there's your PPI news out of the U.S. this morning. Consumer sentiment lower. Inflation expectations didn't have a forecast, but it's higher than previous. Like we showed there on the Bloomberg, it was slightly higher across the board. So to me, it's weird. Like this week, it was CPI hotter than expected, PPI hotter than expected. Market's like, we'll go higher. Makes sense to us. So I'm not complaining. I mean, look, I'm happy to see the market go to all-time highs. It just makes the trading easier, makes portfolio melt up. It's just better. But it doesn't make a lot of sense when you're thinking like, okay, we're at all-time highs. What about this election stuff? So I'm probably just overthinking it, and I just need to stay out of the way and stay bullish. So that is also why, every week I'm pretty much placing like the same bull put spreads and the same credit spreads and going after the same type of like long-term gains with these expirations out, 30, 60 days, 90 days. Hopefully I can get some income here if JD will stabilize. I did have a thought yesterday. If Trump wins, I'm wondering if this whole idea of, imposing crazy amount of tariffs in China is going to smash these China stocks lower. So that might not be a good thing for me, but I hope that's not the case. At least for the China shares. I mean, if he wins, okay. If he doesn't win, okay. I don't think either candidate's going to be great. They're both going to be adding a ton of deficits. But from what I saw, I've seen that the Republican side is going to be adding a lot more to the deficit faster and the debt faster than the Democratic side. But who knows? It's the lesser of two evils, or you're so disgusted with the U.S. politics that you'd rather vote for I don't know. I'm going to write in Joe Pesci, I think, for my president. All right. Let's see here. US 30, SP500, both going well. Good, Greg. Good stuff. Yep. So, okay, I'm going to look at JD. That was actually what I started with probably 20 minutes ago. And obviously, I had a squirrel mind today. So I have the covered calls. Let me double check this here. So I have JD. So I've got my shares. They're covered at 44. We're trading at 43.14. Right now, it looks like I have most of the profit here. So I've got the P&L open percentage. I'm about 90% in profit of that covered call. So I want to see what it's trading for. So right now, I mean, for me to grab an extra 8 cents today is not worth it when I can just close it out, take the 52 cents, recalculate my position, and then add in another covered call for next week. I don't think price is necessarily going to get up to $44 today. It's unlikely. That's trading at like a 16 delta. So there's about an 84% chance that it stays out of the money. All right. If we do get up there, then okay. But I don't think that we're going to. So to be on the safe side, I'm going to go out another week. Let me see if I can do a quick roll on this, and I'm going to add a net position here. So let me go back to my positions. I'll take this position here and roll it. So I'm going to close out the current call at 8 cents. I'm going to roll it to next week and see if I can grab an extra credit for this. So I'm going to do a quick roll. Try to do this again. So a quick roll. There we go. So I would be buying back the current call at 8 cents, and I'm looking to roll this out a week and collecting $1.30 credit and keeping the same strike price. If I roll this down, I collect $1.49, but I'm losing 50 cents. That's still making an extra dollar and change. It's just getting a little bit tighter to price. Let me do the math on that. So right now my break even, Tesla, yeah, I'll take a look at Tesla. Just let me get through this covered call situation here on JD for a second. So we got to go to my little tracker here. I'm doing this. So what I'm going to do is I'm going to do the math on this if I make a trade, and I'll update this in the Pulver alerts in the Discord channel. So right now I own the shares with a break even of 43.30. If I roll this down by $1.49, I roll my strike down to 43.50. The way this would work is I own the shares right now with a break even of 43.30. If I collect $1.49, that brings me down to 41.81. Gets called away at 43.50 for next week. I make $1.69 on 500 shares. I make $845 next week. That's not bad. So I think I'm going to do that as opposed to if I keep it here at 44. So if I keep it at 44, I have a 43.30. I roll it for $1.29, and then I get it called away at 44 times 500. So I make $9.95 if price were able to get up to $44 by next week. But just in case, I'm going to roll it down to just try to get a little bit tighter to price. I'm still happy making, $700 or so. So that's what I'm going to do. I'm going to roll this thing down. Let me see what this looks like. I'm going to do some math. 43.30 minus $1.70 brings me down to 41.60. Get it called away at 43. Oops. 43.30 minus $1.70. Get it called away at 43 times 500. I mean, I can make $700 if it gets down to $43. That's way tighter to price. Okay, so let's door number one. Okay, door number one is $700. Let's just keep track of this for a second. Door number one is $700, and that's price getting called away at 43 for next week. I guess I should type this, huh? So $700 at $43 if it gets called away. If I do the 43.50, that's a roll for $1.47. That would be, calculator please, 43.30 minus $1.47, and it gets called away at 43.50 times 500, $835. At 43.50. And then I'd make over $900 if I kept it at 44. So $1.27, 43.30 minus $1.27, get it called away at 44, make $985. I mean, the answer as far as making the most money is pretty obvious, but the issue is how much closer can I get my covered call to actual price? Does that make sense? So for me, I'm pretty happy just making the $700 and keeping my price lower, because that will also give me the lowest break-even price. Because if I have to keep repairing this, I want to keep my break-even as low as possible. So game time decision. I'm going to roll this down to 43 and out to next Friday, and I'm going to collect $1.70 credit on this. Hopefully $1.70 or maybe $1.65. Let's see if I can get $1.70 for this one. So $1.70, see if I can roll this out. $1.70 not filling. Let's go $1.69. Let's go $1.68. I will penny this down until I get filled. $1.66. Come on, you turds. $1.65. $1.66. Okay. So that trade is in. And I had this also on a couple other accounts. This one here. So I'm going to roll this out. Roll this down to 43. And hopefully collect $1.66. Filled at $1.67. And this account. There it is. So there's my roll. Quick roll. down to 43, $1.71. Try to get filled at maybe $1.68. Nope, $1.67. $1.67. Okay, so here's the math. 43.30 minus $1.67. So now my break even is 41.63. So added a 10.18 expiration call from a roll for $1.67 credit. Break even is 41.63 with $43 covered call. If that gets called away, that's going to be $1.37 per share. So it gets called away at 43. $1.37 at 500 shares. I get $6.85 in this one for next week. So a little bit of an income play there. Let me make that adjustment. That's going to be updated in the Pulver Alert section. That would have been under the stocks and options. So JD, this is going to be a. Is everyone following that logic? I mean, if you're familiar with you own shares, you cover the shares. You can maneuver based on rolling out. So I roll out in time, and then I roll up or down in price, and I'm just collecting more credit. I just do the simple addition subtraction because I'm rolling for a credit. It lowers my cost basis, but I am lowering the strike price a little bit lower. So if it gets called away, my break even is lower. To me, it's more important that my break even is moving lower. That way I can still massage this trade lower if I have to. So I'm going to edit this message here. And this is going to be an update. So 500 shares, 350 in income. So the nice thing is going out to next week, if I get it called away, I actually go from 350 in income to possibly 685. So that's a nice little chunk. So update. I rolled the 10/11 expiration $44 sell call out and down. So for credit. So the new covered call is a 10/18 expiration $43 covered call. And the updated new ownership break even is 41.67, I believe. 41.63 is 41.63. And looking for shares to get called away at $43 for $1.37 per share. That'd be income of $6.85. All right, so that has been updated. Any questions on that? All right. Someone asked about Tesla. Let's take a look at Tesla. So Tesla, big drop. No earnings. I mean, earnings is Wednesday the 23rd. Drop on Tesla. I'm sure the IV jumped up here. I don't think that's a bad play. Tesla. So we have earnings on the 23rd. I'm actually curious, Nick, would you, if you're, I don't know if you're listening, you're typically doing other stuff. I'm curious what Nick put in for his expiration on his put, how far he went out to do that put. So the IV jumped up to 63.2, I'm sure, on the sell-off. We do have earnings coming out on the 23rd. I think what I'm going to do on Tesla is this. 15th? Okay, perfect. Thanks, Nick. Cybertruck, I know it's not great. Did you hear that? I thought I read this somewhere that there are insurance companies out there that are no longer insuring Cybertrucks because of the poor quality. That's kind of embarrassing. You got a car that nobody wants to insure, but I see them all the time. I mean, I see Rivians out here and I see freaking Cybertrucks. So people love those $100,000+ vehicles. All right, 221. So my point is we have earnings, right? I wouldn't mind taking a trade on Tesla for this reason. Now, you got to hear me out here, because if I take this trade, there's two ways to trade it. One is if I just do a simple credit spread and price goes down, we just take the loss on the credit spread. Okay. If I take the credit spread, price goes down, and I can take ownership of Tesla, I'm willing to do that. Okay. So I'm going to take a stab at Tesla for this reason. Earnings is end of the month. All right. If we end up giving a gap fill, then that should be a credit that gives us a nice little income pop. I'm willing to own the shares. I'm willing to do it with a credit spread. So similar to what Nick did by just putting in a put, if I do a credit spread, excuse me, in price goes lower, then I can take my long put side and actually work my long put with the current drop in price and take the shares cheaper, right? So I'm going to look at this trade and see what I can get for a, let's go out to the, I'll take the monthly expiration as well. The 15th is pretty good. So if I did a at the money, let's go with 225 put. So if I sell the 225 and I buy the 220, I'm getting 270 credit. So this trade, if you're comfortable with the trade, if you win on the trade and price goes higher, you keep the 270 credit. If price goes lower, I'm going to use the long put to then cash out for profit if price drops, because here's how it would work. Let's say that hypothetically price drops to 160. Okay? If price drops to 160, think about this. So I have a 225. Let me type this out. This should be logic that, I mean, if you're familiar with options, this is how it can work. So if I do a credit spread and I do a 270 credit, and my assignment price would be 225, potential assignment, right? Now, if I have the 220, this is my hedge. So if Tesla drops to 160, my 220 long put is worth what? Answer this question for me. If price goes from current price at 221 down to 160, my 220 long put is actually going to be worth $60. Okay? Everybody following that math? So 220 down to 160 is a $60 hedge, which means I can close that trade out for a profit of $60, which brings my 225 assignment price. If I take the shares, I get assigned at 225. I take away my credit spread, and I then hopefully protect, let's say $60 on the long put, minus $60 on the put. I can own shares of Tesla with a drop all the way down to $160. I could own the shares outright at 162.30. I'm going to take this trade. Okay. So it's an income trade. I should have enough capital in all these accounts to own it. If I own the shares at 162, that's only a $16,000 cash requirement. I've got enough cash in all these accounts, even my IRA accounts, to take those trades. I'm going to do this. So I'm going to take the trade right now at a 225 by 220, try to get 270 credit if I can. And that is pending. So 270 is not filling. Let's try to get 269. Hopefully it fills at the mid price. 269 got filled. Okay, I'm going across the board here. There we go. Okay. Fill. Okay, 269 is not filling. I'm going to massage these two accounts here. 269, 268. Filled at 268. Okay, this one's 268, hopefully. Come on. Filled at 268. Next one here. Filled. And filled. And filled. Okay, so that is in. I'm going to update this one in my alert section. This is a trade for Tesla. By the way, let me know if you're in the Pulver alerts in the Discord channel. Is it helpful if I put an at everyone when I post an update? I mean, I'm updating trades all the time. If you want me to type in at everyone, I usually do because I make that little disclosure at the end. New trade. I think everyone gets it. I think it was the blog or my trading journal that I wasn't putting everyone on. So I'm just writing to myself. All right, 10/11 expiration. Oh, sorry, that's today's date. We have the November 15th expiration. November 15th expiration, we have the 225 sell put, the 220 buy put, 2.68 credit, and that's filled. Okay, there's two approaches to this trade. One, You don't want the shares. So you just want price to stay greater than 225 by expiration. 2, you do want the shares. So you want price to stay greater than 225, or you can use the long put as your hedge in the event that Tesla shares drop before expiration. I am willing to own Tesla and repair the trade as needed. All right. So what I'm going to do on Tesla is this. I've got the trade in here. It's a nice little range. We had a gap lower today, earnings at the end of the month. I would actually, this is true. I mean, it's going to be a little unpleasant because look, here's the deal. Has anyone out there, let me ask you a question. Have you ever been assigned stock and you don't know what to do with it? So for example, if you don't have the account to take on a $16,000 position and your broker's like Reg T, margin alert, maintenance call, and all of a sudden it shows like you owe the broker money. If you've had that happen before and it causes you to panic, I get it. I've walked a lot of traders through that before. You don't have to panic. So even though I take a credit spread and there's that potential risk of assignment, it's an easy way to close a position. This isn't like a Forex broker where as soon as you over margin, it liquidates your position automatically. You have time with a stock and options account. You have time with the margin account to do this. So if I take the 225 by 220, let me type this out. So 11:15 expiration, 225 sell put, 220 buy put, 2.69 credit. And I'll put here willing to own shares and manage long put profits if price falls. I want to own Tesla as cheap as possible. All right. Now, full transparency, Tesla is not valued to be a $300+ stock. Tesla's value is like 130. Check this out. So it's growing. It's forecasted to grow. The price to earnings, price of shares is pretty high. Price to sales, price to earnings pretty high. Current price 238. Fair value is 140, 137. So if we have a miss in earnings, I'm going to lower the cost basis like crazy. But I'm willing to take that position because the premiums are so good. They really are. So it's easy to repair the stock. So let's say that I took the assignment in Tesla. Okay. If I take any assignment and I went out like 30 days, I'll go out 28 days here. An at the money call is trading for $13 to $15. So even if I took on assignment at $200 and some dollars or $225, I could lower the cost basis by 15 to 20 bucks. Okay. MicroStrategy is just an all-time high. Got some crazy stuff going today. All right. So anyway, I'm going to take the shares if they're assigned, and I think I can easily repair this for a maybe $5 to $10 profit, even on just one share or 100 shares. But if I use the long put to my advantage, if price does drop, and I'm kind of hoping this happens, if price drops down to like 180 or 165 or so, I'm going to use that long put and I'm going to cash in the long put, take the assignment. And the assignment won't happen until 11:15, but in the event that price is really getting bearish, then the market may assign, or the broker may assign me early. So I want to be managing that long put. Now, if price just goes up from here, okay, there's a dip and it just fills the gap. Well, that credit spread by expiration will be, $2.70. Okay. All right. So anyway, I like the trade. And if I own the shares at fair market value with this, potential speculation up to 240, 250, there's a lot of potential profit here. And I think Tesla, give it more time. Eventually, this is going to have to make a decision. I would imagine that people like Tesla enough that it's going to be higher, provided they don't botch anything. But you never know, right? There's a bit of a wild card here, but there's some enthusiasts out there. People love their Teslas. And I still think at the end of the day, this is more than just an auto company. This is a energy play. This is a tech disruptor. This is going to be in the chip space as well. So there's a lot of potential, like crazy value. And I also think that Tesla's probably going to be one of the most profitable companies in the world, because at some point there's going to be 0 humans working for it. It'll be humanoids and robo taxis and robo vans, right? So anyway, that's my trade. But this is a good example of I'm looking at this for credit and income if price goes up, but if it goes down, I do want to own the shares and own it way, way, way cheaper. Okay. All right. So let me take a screenshot of this, post this in the Discord alert section. Team, am I good for a little bit past 11, or am I out at 11 o'clock? Let me know, please. Yesterday we had Forex James on. I thought it was Nick Phillips because he usually comes on after me, but sorry about that to James if he's coming on today. Or Nick, if you're on, look forward to seeing you. All right, so here's my Tesla trade. There's my image, and then my little disclaimer. So that's going into Tesla. Okay, Nick Phillips will be on soon. Cool. All right, so I will leave you with this. In a couple minutes, I'll be out. New trade on Tesla, update on the SPY. I closed out that SPY long call for a small profit. I had a $1.40 that I paid for it, and then 58 cents. I closed out for a net winner. Not great. I got smoked a little bit today on my daily profit play. I had one winner on oil, and then the SPX actually was directional. I got hit for 3 small stops. But overall, the market's still melting up. I'm still up 12 grand on the day. Took a little paper cut. But the nice thing is too, even this Tesla trade, like the loss I took today in SPX, this Tesla trade, I'll flip it for probably a couple $1,000 or just be an income trade for 270. And that's fine too. But realistically, I wouldn't mind taking the shares, because if I own the shares, I could confidently flip that for probably $1,000 to $2,000 of profit. And I'm going to use options to do it. So that'll be a nice way to kind of juice the portfolio in the next maybe 30 to 45 days. Inflation news this week, market doesn't seem to give a crap. It's not enough to damage the market. And here we are sitting here at all-time highs. Something tells me this seems to be a bit political, where it's like, hey, look, all-time highs. Congratulations. Everyone 401k is doing great. But it's like the reality check is not now. And this is why the John Maynard Keynes saying is super famous. The markets can remain irrational longer than traders can remain solvent, because I'm not saying this is irrational. It just shows that again and again and again, this market doesn't really want to have any reason to pull back, right? We had reasons, like here we had a pullback because Powell was not going to cut rates. Here we had a reason because of JPY's deleveraging. Here we had a reason just because it was a September effect. What's our reason now? Well, we just shrugged off employment news. We just shrugged off inflation news, and the market's at all-time highs on the Dow and on the SPY, right? And the Qs are playing catch up maybe a little bit, but what do you do? So is this just feed the beast and momentum begets momentum? Quite possible. So just don't be surprised. Don't tune out this 600 level, because I think it can get there. There's still some disruption ahead, but it's exhausting to sit here and try to be super cautious. I'm just a little frustrated that today was more of a directional day, but that's it. So I'll let you go. I don't want to go too long and chew up into Nick's time. So Chris, I posted a question in your Discord for you. Okay, I'll take a look at that. And then yeah, after this, I will be traveling out. I'm going to the Midwest this weekend, so getting ready to travel out today. And have a fantastic rest of your day, everybody. Have a great Friday. Have a great weekend. And Nick Phillips coming up next. All right, thanks, everybody.
Gentlemen, how are we today? I think someone turned off the lights here, but it's whatever. So you're here for a job interview, Mr. Nicola and Vlad.
I think we have a lot to bring to the table.
What is that, French? You guys from France?
Fort Lauderdale, actually.
Well, you flew in today.
Yes, the back window was open.
You guys traders? We could use some more help with managing the Discord.
In some ways, yeah. We want to be traders to your company.
We are very good at this sort of thing.
Did you just say traders or traitors?
Yes, traitors.
Do either of you have any background in this industry?
Oh yes, hundreds of years.
Look, I can already tell this is not going to work out. I'm sorry, but I love the capes though.
Trading can be scary. Need a safe space? Join the A1 Trading VIP Discord community. We have hundreds of committed traders inside sharing trade ideas, market news, and analysis, alongside our 4 professional traders. Join today with the link dropped in the chat or in the description down below.
Hi, I'm here for my 10 o'clock.
Good morning, good morning, good morning. Welcome to the 11 o'clock segment of the A1 Trading Show. My name is Nick Phillips. I have a little headline company called Victory Capital where we share headline news and all sorts of other things. If you guys want to, feel free to check that out. I'm going to go into just a little bit of what's been happening this week in the market. Hello, Jacob. Nice to see you. I am kind of shocked, a little surprised this morning that we are seeing new all-time highs being made in the stock market. I just heard Chris mention this. It's one of those things where it's like, okay, is this market going to care about anything? Because as of right now, it does not. It is just rally, rally, rally. Inflation news, forget about it. Labor data, forget about it. Doesn't matter. We're just going to keep buying the stock market up. So my mind is kind of blown, especially it's Friday, October 11th. It's a random day, sort of near the middle of the month. No real catalyst. No, it's completely, in my opinion, it is irrational. I think Chris touched on this for a minute and said, you know, the markets can remain irrational longer than traders can remain solvent. I feel as though these moves this morning are incredibly irrational. It doesn't make any sense, but nonetheless, it is what it is. We're, you know, I personally have been trying to scout out an opportunity to take this thing lower, to kind of fade this move, but I haven't found anything I really like yet. I did sort of miss this head and shoulders pattern earlier. I got busy doing some other stuff. But regardless, I think I'm gonna hang out on the sidelines because this movement doesn't make sense to me. The push doesn't make sense to me, so I'm gonna stay out. This week overall has been a pretty quiet week. Let me pull up. Pull up the calendar from my community and let's just review what we did this week. So this week we had the NZD rate decision that we traded Tuesday night. We had USD CPI yesterday, pound GDP this morning, and CAD unemployment, as well as USD PPI this morning. Now the CAD unemployment and the USD PPI situation came out relatively mixed. CAD employment pushed up, I believe. Let's see. So the employment change, significant employment change on the CAD side of things, but their participation rate was slightly lower and their average earnings were slightly lower. So I didn't trade this, even though the CAD did experience a pretty sustained upside move this morning. It has since faded that move, but this initial push here wasn't bad. I wasn't willing to get involved with it because of the earnings side and the participation rate side of the news this morning. And this fade makes sense given that understanding, that idea. So, and then we saw the same thing with the Doxy off of the PPI news. PPI news came out kind of mixed. And what did we see? We see this initial drop to the downside, push back up, drop back down. The market, let's back out to like maybe the 1 minute so we can see this a bit more clearly. Because yes, I'm a bit of a psychopath and I trade the 5-second and the 15-second charts. So we saw this big drop to the downside off the PPI news, but the PPI news was mixed. So really, why is the Doxy reacting like this? Oh, the market doesn't know. Oh, pushes all the way back up. Well, why is the market reacting this strongly? We don't have any reasons. Oh, we don't actually know. And now here we are trading back at the same levels that we were trading at prior to the data actually dropping. So this is one of the approaches that I take to trading news. We always do 4 scenarios. 2 of them are going to be tradable. 2 of them are going to be not tradable. The 2 that are not tradable are data that comes out as expected or data that comes out mixed. This morning was mixed, no trade. And this is a perfect example. It doesn't always work out like this. Sometimes the market ends up moving directionally, even on mixed data days. But more often than not, you see that mixed data will cause a bunch of volatility, ton of volatility. There's a ton of volume in this market, but there's no clear direction. It's just the Wild West. Data hits the market and some of it points one way, some of it points the other way. Good luck, right? So that's a stay away. We walk away. We don't take a stab at anything, and then we come back for the next event. So let's check out how the dollar is doing on some of these higher time frames. Still within this sort of range that I've identified over the last few weeks that I think the dollar's likely going to stay at prior to the election. I could be wrong. This thing could rally, it could drop from here. My idea that I've gone over multiple times on the show already is that we're going to hang out somewhere in here. Even if maybe we push up out of here. I think until the election happens, which we're really only 24 days from the election happening now. So that's not even 24 trading days. That's 24 calendar days. So trading days, I think we probably have closer to 15 to 20, somewhere in there. So, the next 15 to 20 candles, I think we're going to see dollar sort of just go flat, just go sideways, barring any major fundamental changes. What do we want to touch on? Gold doing a bit of a rally. Again, I'm not interested in trading gold. I don't like to get involved in markets when things are at all-time highs. Just not something I want to be trying to trade unless I'm going to try to fade it. But I don't have a reason to fade gold. I don't have a reason to get in and sell this to the downside. So I'm not. Pound. Let's see. The pound has been moving today. Now, pound GDP data. This is another great example of data that really didn't do much. We had a GDP this morning at around 2 a.m. and it was mixed. And we see this clearly mixed reaction in the hour that followed, and then a rally out of nowhere on the pound. For what reason? Couldn't tell you. There's really no fundamental reason that this thing rallied this morning off of mixed data. I think it's just a continual investor positive sentiment for the pound. Now, granted, we are at this major support, so a little bit of upside makes some sense. As far as, are we going to continue to rally on the pound, or are we going to break down below this support? I think we're going to have to wait and see. Next week, I believe we have CPI for the pound. So that should give us a little bit more of a directional understanding. I would assume we get some inflation data out of the UK. Yes, we have that on Wednesday. So next Wednesday, hopefully we get some clarity on the pound. All right, that's really all I've been focused on today. Like I said, it's been a quiet week for me personally. I've only taken 2 trades. Both of them were wins, but they were really small wins and nothing to write home about. I'm hoping next week we get a little bit more of some directional opportunities out of the Forex world. Does this 247 shorts says, does this remind anyone of the 2008 financial crash? 247 shorts, I was 12 in 2008. So I know I have a really good understanding of I guess I shouldn't say really good understanding. I have a understanding that's based entirely off of the book and the movie The Big Short, about what happened in 2008, but I couldn't tell you the intricacies of what the market may have looked like in 2008. I didn't have my finger on the pulse of the information. I was, playing pickup football games. So I have no idea what was happening in the market. Maybe explain what you're thinking. What exactly, what part of the 2008 financial crisis are we experiencing now that mirrors that crash? Because from what I understand about that, we're about to get on a whole tangent here. What I understand about the 2008 financial crisis is that it was entirely based on basically bad lending on the bank's part. The banks, I believe, in the 70s or 80s, possibly moving into the 90s, they created these mortgage, I want to say it's mortgage-backed securities. And they were originally intended, the idea was everybody pays their mortgage. Who's not going to pay their mortgage? Let's create a security to bet on the fact that everybody's going to continue to pay their mortgage, right? And so when they created the security, then they also created all these like groups of mortgages that could get packaged together and graded. And they were giving all these groups of mortgages really high grades, even though a bunch of them were stuffed with terrible credit scores. People that actually couldn't pay back their mortgages when interest rates changed. And in 2007, 2008, a bunch of these little packages of mortgages had enough people in them that had adjustable rates on their mortgages that when those adjustable rates kicked in, all of a sudden they couldn't afford their mortgages. And you had, I don't know if it was thousands or millions of mortgages in default. And so the entire, the housing market crashed, everything crashed. That's what I understand about it. Can I show on the charts now what it looked like then? I mean, I could. Yeah, let's look at. I'll say this: charts can look similar in many different instances. Like they can start to look like they're going to fall very similarly to how they did maybe in 2008 or in 2020 or in the 70s. Like it can look that way on the chart, but that isn't necessarily an indication that something is about to happen, if that makes sense. So yeah, I would say for me, I don't see any real risk that looks similar to we had some credit default stuff. Credit defaults were up over the summer, I believe, but as far as anything else, and with the housing crisis came a bunch of regulations. So many things ended up changing in the financial world due to that crash to protect the financial world from ever experiencing that kind of crash again. And I think the next major crash, at least the next major crash that I'm aware of, was COVID. And COVID was an easily explained crash. The entire world locked down. So if the entire world locks down and nobody's spending money, nobody's buying anything, nobody's selling any, there's no value in holding stocks that are based on people buying up supply. So, easily explained. The 2008 crisis, maybe not so easily explained, but once you get a decent understanding of it, which I have like I would call it like an elementary understanding of it, because I can't relay that information at a very high level. But from what I do understand, it was entirely based on the banking industry they created almost a bubble of sorts based on, they were incentivizing people that really couldn't afford to pay mortgages to take out mortgages so that the banks, could bet on the fact that those people would continue to pay their mortgages. I think it just kind of got lost in translation somewhere among all the bankers that were in on creating this sort of system. Like, I think it was one of those things where it's like they bit off more than they could chew. They thought they were doing something good for the banks and for themselves, and it ended up causing a really big problem. So, but as far as the charts go, I'm gonna go weekly just because it's kind of difficult to look back. What is that? Math is terrible right now. Like 16 years to 2008. So just looking at the S&P, I mean, in 2007, we were tapping into highs that we had tapped into at the early 2000s. So that's an area of resistance, right? We didn't necessarily hit, I mean, I guess we kind of tapped new all-time highs, but we didn't create any sustained all-time highs. Like now we're creating sustained all-time highs, and there's nothing to the left of the chart. So it's not like it's tapping into a previous area of resistance. Yeah, honestly, I don't see many similarities at all. You know, these charts don't, this chart area here, let's call it we'll call it from the beginning of the year, January of 2024 to now, October. It's kind of been rallying all year. And in 2008, crash is happening here. It kind of, I guess, arguably starts here. Not really the same. I mean, let's say we'll go January of 2007, because I guess that's when this big downtake started, was 07. Rallied a bit, but certainly not as much, not with as much ferocity, and more pullbacks and a bit more sideways. Yeah, I would say now compared to 2008 doesn't look anything alike at all. Yeah, that's my opinion on this. Edge Finder says bearish 9 for gold, but gold keeps climbing. Explain. Let's see. I don't know if I'm going to be logged into Edge Finder on this computer. I normally am on my desktop, so I'm not logged into Edge Finder, so I can't access that right this second. Sorry about that. So we're going to have to move on to a different question. Let's see. Is there a possible sell 109,523 on EU? 109,523. You know what? I'm on Euro futures. Let me pull up Euro USD just to make sure that we're clear. Okay, yeah. Slightly different pricing on the futures market. I think I just accidentally closed my I think I just accidentally closed TradingView. Give me 1 second. There we go. Okay. 109,523. Is there a possible sell? From a technical basis, sure. Absolutely. It's, it's a resistance level, previous support, resistance. Yeah, absolutely. It's just a matter of, let's say I don't know what fundamentally you may be looking at to sell this. But if you're looking just from a technical basis, not a bad opportunity. It's all about targets, right? So what are you targeting when you enter this trade? When you go to sell from, we'll call it 109,520. When you go to sell from this area, what are you targeting? Are you targeting this support here? Are you targeting this low that we've tagged here? Because I think that's going to matter a lot. Where's your target and where do you feel comfortable placing your stops? There's very obvious legs here. A bit of support, pull back. So at this point for me, just looking at the 3-hour, I mean, the safest stop loss is going to be above this level here. And we'll go just slightly above it. Because once you break this to the upside, you're starting to make new structure. You've got this obvious lower high, lower low. You break this, and now you've started to create a higher high. Then it's almost like anybody's ball game. Now, personally, if I was looking to get in on this, which I'm not, this is not a trade that I would be looking to get involved in. But if I was, I would actually be targeting somewhere in here. And I'll tell you why. All of this price action happening in here, to me, communicates that there are orders sitting there. A lot happened here. Orders were being placed and filled and placed and filled and placed and filled. And when you identify resistance, 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 support, 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 all happening right here in this kind of smack dab in the middle of this consolidation area, I'd be aiming to enter here. Not necessarily enter here. I just don't, this resistance could hold, but I don't have a reason to believe that it will other than its previous resistance. So I'd be aiming to get in to look to sell out of this area personally. Gold, all right. A1 Trading said gold currently has a neutral -3 bias on the Edge Finder, mainly due to seasonality and fundamental data. So Nelsie 55. That is the explanation for the Edge Finder gold analysis. Seasonality and fundamental data. I would be interested. Like I said, I'm not logged into my desktop, so I'm not actually logged in on Edge Finder on my laptop. I'd be interested to know what the fundamental data is. Just out of curiosity, I have no idea what fundamental data. I guess the inflation, the slight uptick. Guess this slight uptick in the forecasted CPIs, maybe. Legend Story says CPI and jobless are fake news. News are favorable for USD, but the gold are now bullish. What happened? Fake news? I don't know. We're moving into like territory where you can't confirm any of that. Fundamental data will hit the market. It's not a guarantee that the market's going to take that fundamental data and move in the direction of the data, right? If that was the case, everybody who ever started trading and came across fundamental information would be billionaires, trillionaires. It would, the brokers would not be able to pay people out because everybody would just be making so much money. So just because CPI comes out one way or jobless comes out one way, it does not 100% guarantee that the market's going to move in that direction. So could be favorable for the dollar, favorable, not favorable for gold. But you also have to remember, we have this backdrop right now. Like it's kind of quiet over the last few days, maybe the last week, really. There's this big Middle East conflict in the background, right? It's that's still looming. So to me, gold upside with the backdrop of U.S. presidential elections coming up. It's a pretty tumultuous election. Middle East tensions. There's still a war going on in Ukraine. Like there's a lot of tension in the air. So gold continuing to rally, it makes perfect sense to me. When I think about the fact that there's so much geopolitical tension in the air right now, makes perfect sense. It is one of those things though where you do have an element of being correct, but that comes back to the irrationality of the market. CPI should have theoretically pushed gold down a little bit. There's a bit of an argument to be had to counter that idea too, though, and that's that even though we had a hotter than expected CPI, is still lower than the previous, and we're nearing that 2% target that the Feds want. So, let's look at this graph. We've come down significantly over the last couple of years on inflation. We're nearing target. Is that good for is that bullish for the dollar and bearish for gold? I don't think so. I think inflation coming back to target, 2% target. Maybe the jobs data. I think my biggest argument for some more dollar, the labor market is in a funny place because we did just get a really good NFP print, but that was just one print. Overall, the last few months of labor data has showed a significant cooling in the labor market. So I think the Federal Reserve really has to be careful about what they're doing with monetary policy in light of a cooling labor market. Yes, I know, I absolutely understand that we had a great NFP print last week. But in the context, you always hear like one print isn't enough. The markets seem to really not, well, maybe not the markets. The dollar doxy market seemed to really take the NFP print and run with it. This to me is too much. This move here, where we see the dollar rallying off an NFP and never coming back to where we were prior to NFP, I think it's an overreaction. And I think personally we're going to see a bit of a pullback in the dollar unless we continue to get incredibly strong, or not incredibly strong, but strong labor market data. And my reason is that one NFP print, it's like the market took that in isolation and said, oh, strong labor market, strong labor market. It's like, yeah, well, what about the last 3 months of labor market data? Are we just going to forget about that? Are we going to ignore this high unemployment claims that we had? I don't know. So anyways, I think I went on a bit of a tangent there. CPI and jobless are fake news. I mean, I kind of disagree. I think it's just news. I think it's data. I think it's got to be taken in consideration of the overall context. Yeah, happy to help. Happy to help. All right, guys, if you have any more questions for me, go ahead and send them through. I'll go over anything you guys want me to. But like I said, for me, it's been a bit of a quiet week. Haven't taken that many trades. Haven't been looking to get involved with much. I mean, just look at this. Doxy kind of rallied a bit this week, but once we hit Wednesday, we hit midweek. It's gone flat. The beginning of the week was kind of flat. We had really one push this week. Wasn't much. Obviously, stocks are just doing stock things in 2024. 2024 is the year of the everything rally. It's just nonstop push to the upside. It can't stop, won't stop. Absolutely ridiculous year for the stock market. All right, guys. I'm not seeing anything else come through. So if you guys want to, give me a follow on Instagram at official Nick Phillips. And if you want headlines to come through your Instagram feed, feel free to check out Official Victory Capital. I post a ton of Forex and futures, mostly related headlines here. And I try to get these out as fast as possible. They hit the market, they hit the news terminal, and I'm trying to turn around and push them as fast as possible. So go follow this page, hit like or follow and turn notifications on. That way you can keep up with the headlines. And I will see you guys on the next one. Peace.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.